SAP in focus, a DOJ investigation taking place there. This is Germany's most valuable company, so we certainly watch where that one trades at the open. Commerzbank in focus as it appoints Bettina Orlopp as the new CEO. We are waiting to hear from Andrea Orcel this hour, and we'll keep Rightmove in focus as it rejects for a third time an offer from RIA over in Australia, Guy.
Okay, it's time for the opening trade. Let's see how Europe opens this Wednesday morning. As we've been telling you, we are anticipating a negative start to the story. That's already what we see out of the gate for the FTSE 100. A little bit of a fade as the Chinese session has got on, maybe starting to impact as well what the story looks like here. US futures are quite negative. The stock 600 comes out of the gate down by 0.2%. We'll wait and see exactly how the DAX opens this morning. There's a number of single stocks you want to watch out for there. Commerzbank, what's happening with SAP. But I'll throw in Volkswagen as well. Negotiations with unions start today. Keep an eye on that story. Certainly German politicians will be. The CAC is open. It is down by 0.7%. It was one of the big gainers yesterday as a result of what we saw in terms of the luxury sector and the read across from China. The expectation that that would deliver a more positive picture. The IBEX down by 0.4%. Anna, below the surface, what are we seeing?
Yeah, below the surface, looking for clues as to how different today's session is from yesterday, and it is very different. Yesterday, of course, we saw Basic Resources really leading the charge. We had the China news overnight, and that certainly lit a fire under equity markets in the short term. Today, as you rightly said, described it earlier on, Guy, a bit of a sugar rush for equities yesterday. Today looks different then. We see many more defensive names to the fore, like healthcare, for example. That is the best performing sector in the very first moments of trade here in Europe. We do see Basic Resources not doing too bad, not selling off hugely, but pretty flat. Chemicals also doing all right, so not entirely defensive at the top of the sector list. To the downside, we see energy names, and we have a little bit of weakness on the oil price. 74.95 is where Brent trades, and that energy sector is the worst performer, down by 0.9%. But yeah, we're still dealing with the sort of sugar high of yesterday and the aftermath of that, it would seem, and plenty of time to get into some of those individual stories as well.
Yeah, let's get in and see what the single stock story looks like. This is coming out of the Stocks 50, and as Anna says, what you're seeing is some of the mining stocks continuing to have a relatively good performance this morning. Some of the more defensive names, actually, interestingly enough, are rolling over a little bit. So names like Diageo under a little bit of pressure. Airbus is also down. Keep an eye on what's happening with Boeing. Some of the financials are a little soft. Some of the core six, look at what's happening with Schneider this morning. In terms of the Stock 600, let me give you a wider remit in terms of what we're seeing on the stock story this morning. From a point of view, Total is down fairly hard. I need to double check and see exactly what's happening there. But that stock is down by over 2%. But Shell is also down. Schneider's tracking a little bit lower. This is where the point story lies. In terms of the downside, I think there's I can't see a clear read across, a clear sector kind of narrative when I look at what is happening. Some of the UK house builders are having a much more positive picture. Let's get a take on what is happening with this market. Oh, SAP. We've got a trade on SAP. Let's see what SAP.
It's just opened, yeah.
SAP, there you go, down by 3%.
Yeah, absolutely. And so that, you might think, I mean, it's quite a heavy weight in Germany, but it's the German DAX is down 0.75%, and so is the CAC 40. So it's not having too much of an outsized influence.
It's also had a sensational run so far this year.
It has, up by more than 40% year to date on a DAX that's up by 14 or so.
Yeah, I'm still surprised how well the DAX is doing. You could argue, given what we're seeing in terms of the economic backdrop and how that relates back into the DAX, it's an interesting little relationship. And Witty Bagahuna, Global Asset Allocation CIO, Northern Trust Asset Management, joining us now. Nice to see you. Good morning.
Thank you for having me.
What do you make of these markets?
Quite interesting, you know.
You quite positive? You glass half full?
Definitely. We are risk on in asset allocation portfolios in Northern Trust. So we have an overweight to stocks over bonds, and we are neutral. The third big category where we invest, which is real assets. But, what's not to like with resilient growth globally, inflation coming down, and monetary policy loosening all over the place.
How far does it go? How far could that combination, that cocktail, a very nice tasting cocktail, take us?
So two things could go wrong,
Yeah.
right? Growth could weaken more than we expect, and we're not seeing signs of that, at least in the US. Or inflation stays stickier than everyone's priced in so far. So bond markets are thinking rates are coming down, inflation's coming down, Fed's going to ease, ECB's easing, BOE's probably easing. At some point. So things to watch out for, guys. Does inflation indeed come down?
Right.
And does growth weaken more than the soft landing story that everyone's priced?
So I was going to probe that a little bit, because it all sounds quite soft landing and Goldilocks, and that's quite difficult to fine-tune and achieve by some people's accounts. So what is the big risk? Is it that growth is more resilient and inflation is higher and we don't get rate cuts? I mean, what's the risk to the view?
The big risk to the view, in my opinion, is that when growth starts to soften, it's really hard to distinguish between, is it softening to a below-trend pace, or is it going into a recession? And the line starts going down, and it's impossible to distinguish sometimes between the two. So that means a little more increased volatility in the stock market for folks, those who think this line just continues to head down, not just below trend, but into negative territory, versus those who think that it may just soften a little bit. And that inability to distinguish between the two can cause a lot of volatility.
Can I ask you about the banking sector? And I know, Enriti, that you're visiting from the US, but I wonder how appealing parts of the European banking landscape look to you or not right now. We're just getting some lines coming out from Andrea Rochelle over at UniCredit. He's speaking at a Bank of America banking conference. We know he's in pursuit of Commerce Bank, and he says they're moving into a leadership of the sector. This is UniCredit. He's saying that he's speaking very positively about Commerce Bank, as you might expect, saying, and indeed his own bank, saying that UniCredit is the most efficient bank in Europe, pitching himself as a good owner, I suppose. How appealing, this consolidation story rumbles on, how appealing do banking stocks look to you?
So, look, stepping back from a macro lens, we have actually just downgraded from an overweight to market weight our European exposure. And really the worry has been that all the economic data is looking quite shaky.
Yep.
Whatever you've seen for the last at least 4 weeks has been PMIs below 50, sentiments rolling over, and your opening comment, Guy, was that DAX was at 14% or something.
Yeah.
So that was the disconnect that we were looking at. That, well, beginning of the year, we did think we would see a nice uptick, but it started to slow down way more than any of us anticipated. And inflation is coming down, but not fast enough to think that there would be a very sharp relief on the rates front, which is what banks like. So to us, it's not a it's not a place to take a lot of risk in that segment right now. And we have just gone neutral on the region. It's not bad enough for us to go underweight yet.
Okay. What would it take to go underweight?
Again, growth story.
Lack of ECB rate cuts. If the ECB accelerates the rate cut story, does that make you more positive?
Depending on why
precisely, or does it make you more fearful?
So why are they accelerating the rate cuts, right? If it's because growth slowing down, that doesn't make me positive. But if it's because inflation is coming down faster, they think they're far above their neutral, good time for them to come back to neutral, that can be actually quite positive for the economy. And we are beginning to see lending surveys show some positivity, not the real data, but the lending surveys are beginning to show some positive tone to them. So not fearful enough to go underweight right now, just staying neutral.
What do you make of the Chinese stimulus package?
Oh, that's something we've been waiting for a long time.
Is it big enough? Does it do anything? Does it change your view on the markets?
So we broke it up into 3 components. The monetary component, which is really good, actually. Good for companies in China also, right? Property market component looks quite good. But if you talk to the China bears, they're going to focus on, well, there's no fiscal, it's only monetary, it's only property. To me, it's never all one at once, and it's a nice start, and something market was waiting for, and something market had not priced in at all, because if you look at the valuations for Chinese stocks, they are pretty much at the 10th decile, bottom decile. So a lot of the bad news is priced in. The government is starting to do something. We are actually overweight the emerging market equity complex, not one country in particular, but China is a quarter of that index. So, yeah, I think this could have some legs.
So it's a nice start, but it's interesting to think about what is the end point, Anwiti, because having conversation with guests over the last 24 hours, it seems as if you don't have to believe that China's going back to growing 8% a year to be positive on Chinese stocks.
Yes.
But you probably do have to be a bit more positive than you've been about the Chinese consumer to see a real turnaround in that economy.
Yes. I mean, there are measures in the policy announcement that does release some more spending capacity for the consumer. The rate cuts are going to help. Some of the rule changes on how much down payment you need on housing, where you can buy housing, those sort of supports are going to be supportive of the Chinese consumer. But I'm 100% with you that it doesn't mean an 8% growth rate. I think that everyone's very nicely forgotten and will be very happy to have 3 to 4% growth rate, which is still double what the developed world is growing at.
Yep.
Right.
Talking of the developed world, are you positioning for the US election yet?
No. It's impossible to call at this point.
Okay.
We talk about it in terms of 4 layers of risk.
How do you hedge it then?
You don't. You cannot. You have to wait and see what happens.
Okay, so 4 layers of risk.
4 layers of risk. So the one, we don't know who's winning. The elections are too close to call, so that's one layer. The second, we don't know the makeup of the Congress, and that guy is very important because the president does not make rules unilaterally. It matters whether we get a split Congress. It matters who has control and all those. And then the third layer we think of is that whenever they're campaigning, their rhetoric is a lot more sharper than what they actually end up proposing in the rule-making phase of the governance. And that is many times lower in terms of its impact than what they start out. It's not going to be 100% tariff. Maybe it's 40%, maybe it's 60%. We don't know.
Right, and is that true for a second term for President Trump as well? That the things that are enacted are not the same as the things that were promised. And how much do you use 1.0 as a playbook for Trump 2.0? Because some people say that the impact this time around could be a lot bigger.
Yes, that's definitely a risk. But again, to that third layer, we don't know the makeup. Right? Does he have the support of the Senate and the House to do all these things? On the tariff side, they can do things unilaterally. And then the fourth layer that I do want to get back to is that we have these theories on what tariff means for inflation, what it means for growth. But in terms of economic impact, it's still not always clear because that's not the only thing affecting the economy at any point in time. There are a lot more other fundamental factors at play.
So difficult to get to that sort of everything else being equal.
Exactly.
Points.
Everything else is never equal.
Difficult to analyse,
So what's the investment theory around the US right now? Is it that the Fed is going to cut rates, that the economy is going to be great? That's how you started the conversation, that the cocktail looks great. But, but I don't. There's an extra mix that I don't know what I'm putting into the cocktail, which is the politics.
Yes.
How do I kind of balance out those risks? Everything else looks great. Economy still looks fine. Fed's cutting rates, but how do I think about risk in the US markets? How do I think about volatility? If I can't, if the known unknown is so difficult to quantify?
You focus on the fundamentals. And the earnings growth in the second quarter was around 11.5% or so. Projections for the remainder of the year is still very strong. And the best factor to me that I've focused on is that U.S. market performance is broadening out away from your Mag 7 stocks into other parts of the economy.
Okay.
So that actually is really good validation that people have stopped hiding in a few growth names and have conviction in other parts of the economy that earnings are actually broadening. The rate cuts are going to help the margins. Margins are staying elevated. And those fundamentals are all you can focus on at the moment not knowing any of those 4 layers of uncertainty that I talked about.
4 layers of uncertainty. Thank you very much indeed. And Witty, great to see you. Thanks for stopping by. I really appreciate it. And Witty Bahuguna, Global Asset Allocation CIO, Northern Trust Asset Management. Thank you very much indeed. Quick look at the core 6. Let's see what's happening there. We've already seen some indications that we are seeing Schneider a little bit softer. There you go. Nestlé's kind of fairly flat. The defensives are doing okay. LVMH still up today, actually, which is interesting, as is ASML. Novo Nordisk up by 1.1%. Individual stock stories. Joe, what do you got?
So we are seeing some weakness now in SAP in the open of trading over in Germany. That was actually the worst performing stock on the Stock 600 today, declining 4% on news that the US is looking at potential price fixing enterprise software sold to the military, other departments in the US. Now SAP declining to comment on this when we reach them, but we are seeing weakness in that stock, pretty significant, down 4% at the moment. Then we're going to go over to the best performer today. It's not an area we look at too much. It is a Finnish paper company, Valmet, getting €1 billion order from Brazil. That broke last night, so that's the best stock we've got today. Valmet soaring over in Helsinki, not a place we go too often in terms of both sectors and the exchanges. But here's the deals in focus now. Rightmove coming down. I've just been reading Panmure Liberum's note on my phone just a moment ago, and they say they see a very low probability of this takeover going ahead, partly because it is cash and stocks, and they say a lot of UK funds will not want to hold shares in the enlarged company, so they think that's a big stumbling block there. We had Sanofi earlier reporting from Bloomberg's deals team, reporting potentially that they're going to get a couple of separate bids from private equity. They may have actually received the bids and they're mulling them over for their consumer health business. A couple of $1 billion that unit's worth, but that stock heading lower. And then the London Stock Exchange looking to offload 5% of a stake in Euroclear, one of the big clearing houses in Europe. They own a stake in that. They're looking to sell that. That's according to a Sky News report. But LSEG shares holding it pretty steady at the moment. Then there's a couple of sectors to bring you. Payment processors. Now, global payments in the US plunged last night following weak results, weak volumes out of them. And we're seeing a little bit of weakness today coming into Adyen, also Nexi over in Italy, Worldline in Paris, all of those shares coming down. That is a read across from the US. The other sector I wanted to look at was miners. You did mention earlier, we're seeing gains yet again, given we saw massive jumps yesterday, pretty impressive on that China stimulus news. All of these stocks were up around 5% or more. Just noting Rio Tinto also had a presentation to investors today. That was over in the US. That was a US business. They published that this morning, according to analysts. Take a look at Air France now. This is the biggest gain since December for this stock. JP Morgan double upgrading, underweight to overweight. They like the pricing in the sector, and they like the fact that fuel prices are coming down and everyone booking holidays. I've just booked some summer sun over in December as well. I'm looking forward to that. But holidays are a good space, according to JP. And finally, one getting a negative analyst rating is AXA, downgraded at CIC in France. Now, they say that this is a valuation call. The wealth business, insurance business, doing really well at AXA, but the stock's rallied so hard, they think you should be no longer buying, and they downgrade to neutral. AXA falling 2% in Paris this morning.
Joe, thank you very much. Joe Easton from our equities team with an update on some of those movers and his holiday plans. Nice reminder. I'll get on it. Get booking. Let's have a look at what we're hearing from Andrea Orcel, the UniCredit CEO. He's speaking at a conference, Bank of America conference on the banking sector, and he is saying some interesting things about Commerzbank, describing it as a strategic fit for UniCredit's metrics. We'll get more on that in a moment. Oliver Crook joins us with a breakdown. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the opening trade, 8:21 in London, 9:21 if you're in Frankfurt or Berlin, and watching this with a view to what happens to Commerzbank. European stocks then under pressure a little this morning after the gains of yesterday. We're getting new lines coming out from Andrea Rochelle, the CEO of UniCredit, about Commerzbank, speaking at a Bank of America banking conference and saying that Commerzbank is an investment for us, nothing else. Then going on to say it is a test case for Europe. Let us bring into the conversation Oliver Crook, who's been following the story for us, of course, from Berlin. Ollie, good morning. So, I mean, how do we interpret these lines from Rochelle? On the one hand, saying this is just an investment. We might do it, we might increase or we might sell the stake, suggesting he's not very attached to it. But at the same time, describing it as a test case for Europe, that, he knows the stakes here are pretty high.
Yeah, and it's pretty interesting. I think Andre Rochelle playing it pretty cool here, as he has from the beginning, saying that he's intensely patient, that they could go up, they could go down. They're just going to see how this thing sort of materializes, while at the same time raising his stake to almost, more than a fifth of the holding of the bank. What I find interesting about these lines, Anna, is that we have been hearing a lot about what the government has had to say, what the unions have had to say. We have heard very little about what Commerzbank shareholders have to say, whether or not they are in favor of this deal. And when you look at Andrea Rochelle, and in terms of how shareholders are going to look at him as a potential owner for this bank, he has done very well on profitability at UniCredit. He's done very well on payouts. And in these lines, he's reiterating how much money UniCredit is distributing to shareholders, saying that they're going to put out, that they're going to reach profit of 10 billion euros, that they're going to pay out dividend, move to 50% from 40%. If you're a shareholder in UniCredit and you're listening to this, is this Andrea Rochelle making a case for you in order to try to go in this? Not only that, he's also making the case that this is about broader Europe and making banks competitive within Europe. He's really trying to make himself the sort of best case for shareholders, but also for banking in Europe. I think these lines are very interesting in terms of who he's trying to speak to.
Yeah, be interested to see if the ECB can block this, could block this, should block this. Will Germany block it? Let's talk about that just in a moment. I want to come back to that idea. But let's talk about Bettina Orlopp. Does she have a better plan for Commerzbank than Andrea Rochelle? That's the key question here, isn't it?
Yeah, I think it is part of the key question. It's a case that they're going to have to make to shareholders. And it's a case that, by the way, they're making to shareholders right now, literally as we speak. The management committee is in front of the supervisory board. They had their first day of meetings yesterday, from which we got this decision to put Bettina Orlopp as CEO to replace the outgoing CEO. The outgoing CEO, who, by the way, said that he did not want to have his contract renewed the day before all of this happened. So for the management perspective, before they have any sort of ideas on strategy, they need someone strong and that's committed to the bank to be leading the bank, and that's what they get in the form of Bettina Orlopp, who's been there since 2014 and CFO since 2020.
And thinking about who decides and who gets a say, who gets a seat at the table, you've referenced shareholders broadly, Ollie. Of course, that includes the German government. But we heard from Christian Lindner yesterday in the German government, and he said this decision is up to the management and the supervisory boards, and they do want to continue eventually selling down that government stake.
Yeah, absolutely. And I think that's why it's really interesting to hear from the finance ministry and the FDP, the liberals, who are very economically more on the sort of libertarian side. They do not like government involvement in companies. They think that they should continue to sell the shares. They were uncomfortable about this the way that the approach went by, which is why they have now stopped selling the shares. What I think is interesting is thinking about how do the German government actually interfere with this and block this sale if they want to. What means do they have? I mean, I think that the best way for them to do it is probably just to hold on to 12% of this stake in the bank and be just a very difficult party when a company is trying to be taking over. If someone who owns 12% of it wants to block it, of course the unions are trying to take a different tack, saying that they should declare Commerzbank a critical infrastructure, which would be another way of going about it. But there are a lot of different paths that they have to be evaluating.
How European does Germany feel right now? So there's a big push to get cross-border banking deals over the line. Let's see how Germany reacts to that. There's a big idea that Europe needs to become more competitive, that we need to see common debt. You've got, obviously, Draghi talking about that. Germany doesn't feel particularly minded to do that as well. How European is Germany?
I mean, that is precisely the point that the foreign minister of Italy made yesterday, saying that basically when companies want to come into Italy and buy a company, no big deal. It's a free market. It's an open market. But when Italy suddenly wants to go into Germany, suddenly it's not a free market. Again, Guy, we talk at this sort of essence of what is Europe going forward? How is it going to remain competitive? We talk about a banking union. By the way, we've spoken to the German finance ministry who said, how brave do we want to be? Do we want to let companies move across borders and do these sorts of things? But maybe there's a little bit of not in my backyard when it comes to Germany. These issues become much more politically sensitive, particularly, Guy, at a time when you have these sort of rising nationalist forces within Germany.
Ollie, great stuff. Thank you very much indeed. You also got the Volkswagen story today. Keep an eye on that. You got the SAP story. Keep an eye on that as well. Busy day in Germany. So let's talk about what we're going to talk about next. 25 or 50. No, I'm not talking about the Fed. I'm talking about the Riksbank. Will Sweden go for a big cut that it potentially discussed last time around? The economists don't think so. They think 25. We are about to find out. We will bring you that Riksbank decision very, very shortly. 25 or 50. This is Bloomberg.
Principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
$50 or 25? The answer is 25. The Riksbank has just cut rates from 3.5 to 3.25. They discussed last time around that we potentially could see a 50 basis point cut. It was discussed. That has not turned out to be the case. So the Riksbank has cut rates by 25 basis points. The expectation is that we are going to see a series of 25 basis point cuts coming through. The currency has improved recently, which takes some of the pressure off as well. The Riksbank now sees CPIF, which I'm assuming is some sort of variance of CPI. I'm not sure what the F is, but we'll come back to that, at 1.6% in 2025 versus 1.8 previously. So they're downgrading expectations. Riksbank may also be cutting the two remaining meetings this year. Now sees GDP at 0.8 in 24 versus previously 1.1. So they're degrading inflation and growth.
Yes, and that seems to be moving. You're looking at the Swedish krona against the euro. Do you see to be a little bit of movement on that? Maybe that line that they may cut at the two remaining meetings this year. That is a fast pace for Europe, as we were discussing with the guest earlier on. That's a fast pace of cuts coming through. But that's the story in Sweden, and that moves the euro, as you can see. Let us pivot our conversation to rates over in the United States. Joe Biden has predicted that the Fed will cut rates further. The US president was speaking at the Bloomberg Global Business Forum, where he cast climate change as a new economic opportunity for America.
In fact, it's a perfect time to go big. The market for clean energy is booming. Inflation is way down in America. The Federal Reserve just announced lowering interest rate, and I predict they'll go further down. We should give business even more confidence to invest trillions of dollars that are on the sidelines in the clean energy industries of the future.
President Biden there speaking at the Bloomberg Global Business Forum, talking about his expectations for rates. We'll see what the Fed decides to do. One part of the market that might not benefit from lower rates could be private credit. The asset class, at least, more than doubled in size since 2019, thanks to interest rate hikes that made its floating rate debt more attractive to investors. So as rates come down, how nervous is the sector? Let's speak now to Eric Hirsch, co-CEO of Hamilton Lane Advisors, with us on set here in London. Really good, Eric, to have you with us. So I suppose I just want to get your big picture expectations then about rates coming down and what that does to appetite for private assets, such as private credit.
Yeah, I think there's a few factors here, and good morning and happy to be here. I think President Biden certainly wants rates to be coming down and coming down fast, ideally before the election. That's not going to happen further. And so I think, what do you see for private credit? I don't think the driver of private credit has actually been rate hikes. I think it's really been banking dislocation. I think if you look particularly where the growth has exploded, and it's been mostly in the U.S., although Europe has been a big beneficiary of this as well, you really have seen kind of the collapse of sort of the regional banking sector, and those were typically the providers of loans to private businesses. And now sort of the private credit industry has kind of stepped into that void. So I think rates, whether they're higher or lower, I don't see that sort of sapping the appetite for that sector.
So you see that's resilient. So even if we get cuts continuing over, months and all the way through 2025, what is your expectation then for the appetite that investors will have for private credit in that environment?
I think the appetite for investors, I think, will remain the same, because in a lower rate environment, it's a relative play. So whether private credit is coming down because rates are down, so too is public credit. And one of the reasons why we've seen the rotation is because the gap between sort of private credit returns and public credit returns have sort of favored the private side. And so that disparity will still be there, and I think you'll still continue to see that rotation.
There's too much money gone into private credit.
Yes.
There's a lot of... Yeah, okay, fair enough. So what does that mean?
So I think there's a piece here of too much money means there's too many players today, perhaps too much inexperience, and so I don't think we want to paint with a broad brush and say all private credit is terrific and everyone.
When do we see the divergence between the well-managed funds and the not-so-well-managed funds?
We start to see that when the economy softens a little bit.
When does that happen?
I think we're not going to see that for a little while. I think the market remains very resilient, and so one of the reasons why you're seeing kind of that dispersion of return in the private credit sector not widen out is that we're not seeing defaults, we're not seeing bankruptcies.
When do the defaults come? Because there's inklings that's starting to pick up a little bit.
Perhaps. I think we're going to need to see, again, real economic downturn before we start to see that. For all the talk of private credit people saying, oh, we're happy to own the asset, they don't want to own the asset. So right now, people can refinance and change and alter fixed terms, and they're doing that. That's not a bad thing for the economy. We don't want to see, no, defaults are not good for anyone. And so right now, as long as you see a huge supply of capital in that market, you're going to see flexibility. Flexibility is not a bad thing, and people are taking advantage of that.
And thinking about the regulation, you mentioned that one of the drivers of interest in private credit has been maybe a mess in the banking sector and private credit stepping in, and I'm sure to some degree plenty of voices in sort of regulatory circles will be pleased that we didn't see a big pullback in lending in the economy as a result of the problems at SVB and the like. But then the spotlight turn, and then people start to ask, well, how much transparency do we have? Is this a sort of shadow banking risk that we're building up here in private credit? What have we learned on that front, do you think, in the last sort of year or so?
I think as the private credit sector continues to grow, it's already regulated, and it will become more regulated. There's no question that there will be increasing calls for transparency. That will happen. I think everyone's sort of expecting that to be the case. Again, the firms that are sort of the dominant players in that lending space, they're big firms. They're, in many cases, they're global firms. They're, in many cases, household names. And so they're already under a lot of regulatory scrutiny. That's not going to abate. That will, in fact, just do nothing but increase.
Does it dent the investment case, then?
It doesn't. I think the investors are fine with more of that, and frankly, so too are the service providers. This is sort of the cost of doing business.
Is private equity going to struggle to raise money if it doesn't give some money back?
Yes. Yeah, I think there's no. You see it already.
Yep.
You see.
When
it
do
today.
exits happen?
So we're seeing.
There's a little bit, but there's not enough.
There's not enough given the amount of dollars that they're investing.
Yes.
The sector needs to remind itself that we need to keep things in somewhat of balance. We can't just simply have deals, and no sales. We need to have both. And right now, you see a real imbalance of a lot more capital is going out to do new transactions than is coming back from exits. And investors are simply a little bit cash-strung. You couple that with just an enormous amount of products in the market. We've never actually seen more product in market than we are today, period. And so that is an overwhelming amount of choice. Choice can be good, but choice can be also
Why should I invest in private equity when IRRs are sub 10? The equity market, the public markets are doing much better. Public credit's doing okay. 10%, less than 10% isn't enough.
I think if we're only looking at it on a one-year basis, then you're absolutely right. But once we stretch that view out to a 3, a 5, a 10, a 15,
so IRRs are going to go higher, are they?
Well, historically, they've been substantially higher. The outperformance against the public market.
Was that an anomaly, or was that... Is this the normal?
Can't be an anomaly when you have it on a 5, 10, 15, 20, 25. And so I do think that this is a moment in time. The public markets have been incredibly strong. However, as you all often talk about, driven by a very small number of companies, and they all have one thing in common. There's a massive play right now globally on AI. And to the extent that that doesn't sort of come to fruition as people are already pricing into the market, we're going to see a significant public equity market pullback. And I think that, to me, is sort of the head of the pin that we're dancing on right now.
And what's the read across into your world if we do see that?
Well, we don't cheer for public market decline, but we don't love when public markets are skyrocketing, because it leads to this issue of 10% may not be attractive enough on a relative basis. And so incredibly frothy public markets is never the friend of the private side. We'd like to see things a little bit more sane, a little bit more normalized, and I think that's what's coming.
I was going to ask you if that's what brings you to Europe, and I'm not sure if sane, and is that sane, normalised? Is that why you're here? I mean, valuations don't maybe look as frothy as they do in the States. I mean, what's the attitude towards European assets?
Well, I think it's a great question. And so there's a real difference between the public markets. You see sort of a real valuation disparity. In the private markets, not so much. So the typical private equity deal in Europe is being done at about 4 or 5% less than the U.S., so not a huge differential on the private side.
And exits here? Is it easier? What's going on?
I would say it's similar. You're not seeing massive exit activity here. You're seeing a little bit higher than in the U.S. And so, but we have the same imbalance here as we do kind of around the rest of the world.
Does taxation start to change the story in Europe as well? We're starting to see a pushback against private equity and higher taxation in places like France being talked about by the government as well.
I always say, this is an asset class where people have gotten very wealthy. They're going to continue to stay in this asset class, even if tax rates go up a little bit.
Okay.
Eric, thank you very much.
Pleasure.
Thank you for joining us. Eric Hirsch, co-CEO of Hamilton Lane Advisors. Really interesting conversation. Thank you very much for joining us around the table. Shall we go to Riksbank or UniCredit?
I want to talk about the Riksbank for just a moment.
Okay, let's go
because
Riksbank.
we had the 25-50 debate, which is obviously something that we've kind of gone through in the United States, but we're now having it firmly in Sweden as well.
Yes.
So the Riksbank's just cut by 25 basis points. You can see the reaction in the market. The euro's up quite strongly. But the Riksbank is pointing to the fact that it sees more rate cuts coming through potentially this year, and it will not take off the table the possibility that we see a 50 basis point cut coming through. So the 25-50 debate is very live in Sweden at the moment.
Yes, and live in Europe then, it's at least somewhere, in some geography. I was reading Marcus Ashworth in one of his opinion pieces talking about, liking some of the messaging at least. I think he was quoting Goolsbee on the Fed and suggesting that was clearer guidance about the extent of the rate cuts we're going to get stateside and wanting to see more of that in Europe. Maybe he's happy with the Riksbank this morning.
Well, they've only delivered 25.
No, the language.
The language is certainly more dovish and hinting at more dovishness. So we've got 2 more remaining meetings so far this year, and there's the possibility that one of those at least could be a 25 cut. So it was the pricing up until now has been 25, 25, 25, but maybe actually rather than the 75 in totality, you get 100, and that maybe is what is moving the euro dollar at the moment.
Shall we pivot to what is being said? A lot is being said by Andrea Orcel right now.
He's got a lot to say
about Commerce Bank. He's being asked a lot about this at a Bank of America banking conference. He's the red headline that's caught the attention of our editors this morning. UniCredit is not going to ask for a board seat at Commerce Bank, and there's a load of other lines coming out here. We talked earlier with Ollie about the fact they're saying that this is a test. He's saying this is a test case for Europe, but at the same time saying that this is just an investment. It's nothing else.
Does he not want to ask for a board seat because he wouldn't get one? Would he be rebuffed by Bettina Orlopp? Is that kind of the suggestion there? What would Jens Weidmann make of that approach?
Does that make it easier for the German government to approve to the extent that they get a say as shareholders? But we've heard from Christian Lindner, they do plan to sell down that stake that they still have there.
What do you do? You're a shareholder. Who do you think is going to be the best custodian of this asset? Is it going to be Bettina Orlopp? Or is it going to be Andrea Orcel? He has done very well at UniCredit. You look at the metrics that are coming out of that bank, you look at the valuation it now trades on. Do we believe, as investors, hypothetically, that he is going to be able to run this asset? And how difficult is it, therefore, to resist?
Yeah, you want to weigh these up on a sort of all other things being equal basis as well, don't you? And we're dealing with the German economy right now, where a lot of moving parts exist.
Sure.
And, so I just wonder how much complexity that's going to add in. Like Andrea Orcel's talking about the Mittelstand, that's one of the things that draws them to Commerce Bank. And every time we speak to Bettina Orlopp, we talk to her about how the Mittelstand is doing. And it's been fairly resilient up against some of the other headwinds, and there are plenty that big business in Germany.
But that's where the concern lies, is that relationship. What happens to Germany? What happens to Germany if you see this being taken out of German hands? How does that lending continue? and what happens therefore to the German economy. But Orlov's in a really difficult place as well. If she wins, i.e. she keeps it as an independent entity, does the share price remain where it is right now? Or is the first thing that's going to happen as she takes over as CEO is that the share price drops dramatically?
Yes, I wonder what success looks like for her.
Potentially a lower share price.
This new job
which
she's taken on.
Yeah, a lower share price, from her point of view, may signal success. And therefore, she believes that she, on a longer-term trajectory, can take it higher.
And this is not the only German story we're dealing with this morning. Should we talk a little bit about SAP?
It is, yeah, the stock, last time I checked, the stock was down. We'll talk about it a little bit more. It's gearing up for a fight. US officials investigating SAP for price fixing on various government agencies, including military contracts. We'll talk about what that means for the stock next. It has had a great run. It is the highest cap stock in Germany right now. We're going to talk more about SAP next. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We are 46 minutes into our European trading session, and we have a little bit of weakness coming through in some European markets. The DAX and the CAC 40, you can see, under a little bit of pressure this morning. Let's pivot the conversation, though. At Climate Week in New York, the Earthshot Prize Innovation Summit, organised by Bloomberg Philanthropies, concentrated on enhancing climate solutions. Ruth Porat, the president and CIO of Alphabet, spoke to Bloomberg's Eric Schatzker about the balancing act of AI.
This is an opportunity, a legacy opportunity for economic growth in delivering these benefits to everyone in this country. And that starts with infrastructure, the investments that you were asking about, deep technical infrastructure, the subsea cables that link everybody up. But it then very much goes to, You have to be connected to access the information and tools that ensure that everyone, everywhere around the planet, has the same quality of information and access to markets that everyone in this room has. And one of the things to your question about AI is we are now serving people around the globe in 246 languages. But what's really profound and goes to this notion that AI is moving really quickly, we added 110 languages in the last 6 months alone, which means 500 million people on the planet can now access information in their own language. That's the second part of the triangle. The third part of the triangle is ensuring that people have the skills to thrive in this changing world and ensuring that we're doing the right kind of training, skilling globally. Delivering on that triangle maximizes the upside and helps with some of those issues that you asked about on the downside.
President Biden will be here on this stage in a few short minutes. Please don't think of us as the warm-up act. His administration has developed a wide range of initiatives around AI. What do you hope to see in terms of AI policies from the next president, whomever that happens to be, and the next Congress?
Well, I think very importantly, let's take stock of what has been done, because I think at the core of the approach from the White House, from the president and his team, has been a recognition about the strategic imperative due to the economic upside and the social benefit upside. And so it's about maximizing the upside, mitigating the downside, and bringing together experts from the private sector and the public sector to work together has been key, point number one. Point number two, they've taken a risk-based approach, which is a recognition that AI is applied to many different things in our daily life. The opportunity is wide, and so there's not one size fits all. Think about the risk inherent in the application of AI in any area. And then they've required the industry to do a number of things to actually mitigate against the downside around transparency, around red teaming, things to prevent abuse of it. The other thing is really encouraging bipartisan solutions. So I would also say, if I can broaden it out, right now in the Senate, there's a bipartisan approach around an AI framework that Senator Schumer and Brown and others have proposed. And again, it looks at all elements of how do we invest to be competitive, how do we prevent working on the downside. So I would hope it's a continuation of this and that it continues to be bipartisan because it's such a critical issue.
Ruth Porat there, the president and CIO of Alphabet, speaking to Bloomberg. Really interesting then, the AI threads this morning in our conversations, talking there about the energy needs and the opportunities, but also with Eric Hirsch talking about the sort of opportunity cost if money goes into, if money keeps going into AI and the AI boom, then what does that do to other assets that also want to get a piece of that?
Starve them potentially of capital, but do you see a spreading out of that AI boom into other spaces? And I don't mean just buying other things. I mean, does the effect of the AI story widen out? Do we see, and you're seeing it already, like grid operators doing very well, the companies that provide nuclear power, for instance, starting to benefit as the tech companies look to how they're going to power their server farms. It does feel as if there's the sort of the second, third derivatives of this story beginning to be put into place.
One that hangs over so many other themes that we talk about. Let's stick with the tech theme, shall we? US officials are investigating German software giant SAP for potentially conspiring with other firms to overcharge government agencies over the past decade. Let's get the story with Bloomberg's Karen Matusek, who's with us this morning. How does all this come to light then, Karen? Because one thing that comes out as you read the story this morning is that this is an investigation that has perhaps been running for quite a long time.
Yeah, it came out more or less by accident, actually. My colleague Jake in the US, he spotted some filing in a US court docket in a litigation between Carahsoft, the big reseller of software to government, and the government, who wanted a document from Carahsoft, and they apparently didn't comply fully, or at least in the view of the government, didn't comply fully with the order, and then litigation started in court, and in that litigation, this probe was mentioned, and SAP was also mentioned.
What do we know about where the investigation stands?
We don't really know how long this has been going on. That's kind of one of the big questions, and how big the volume of contracts that are touched are. But we do know that in 2 years ago, in about June 2022, this struggle between Carahsoft and the government over handing over documents started. That's when the order came out, and that's when the litigation started. So that's so far what we know. What we also know is that on Tuesday there was a big raid of Carahsoft, and we don't really know it was related to this probe, but Carahsoft said it was related to an investigation into a company which Carahsoft was doing. business. So it's that's what we know at the moment.
Yeah, and the SAP share price then down 3.8% this morning. What are the risks for the business?
Well, being in trouble with the U.S. authority isn't exactly fun. They aren't shy of imposing hefty fines. A lot of German companies have experienced that. So I'm sure investors are a bit concerned about that. In these kind of price-fixing probes, the government, under the U.S. laws, can impose kind of a triple of their damage. They can recover it, plus some additional fines. It depends. I mean, this is probably, it depends on who is going to get those fines, and it's still, we don't know what will come out of the probe. Many probes don't end with a formal imposition of something like that. But, at the moment we talk about risk, and these are the risks that they are facing, actually.
Can I just talk about what is happening with the German economy, what's happening with the DAX, which is doing very well right now, and the corporate stories that we're focusing on a kind of bottom-up kind of a basis. So you've got SAP, which has been a star performer this year. As you say, now there's a little bit of a black spot against it, potentially in the form of this. We've got VW. So Volkswagen today is starting to talk with its unions. We don't know how that's going to go. We've got the Commerzbank story unraveling as well. We don't know how that's going to work out. How does the corporate story in aggregate feed into the kind of the national macro story in Germany right now? Can I relate what is happening with the macro data, the DAX performance, and the single stock story together? What is the picture coming out of Germany in totality?
Yeah, I think Germans are really in a bad mood at the moment. Despite as you said, the good performance of the DAX, you have these big kind of light companies that stand for what Germany is proud of its economy, in its economy, especially VW, but also SAP. SAP is one of the big tech players Germany or Europe as a whole has, as compared to the US. So it's kind of getting people in a bad mood and looking. And Germans are particularly good at saying, oh, everything's bad, oh, things are turning bad. We are really on a bad track, and at the moment, a lot of stuff is hitting the fan here, and people are really kind of worrisome. And this is kind of, we have VW, we have Commerzbank, now SAP on top. It's like every morning you wake up and say, what's going on now? So it's troublesome, especially for the government, which is kind of in a kind of bad position anyway. And now they are also having one trouble after the other on the corporate side. It's really not fun.
It's not fun in Germany right now. Karen Masisek, thank you very much indeed. They've just had the World Cup. They've just had the Euros. The football was great. We all enjoyed that. It's been a great summer. It's a bit like France as well. Had the Olympics. Things are rolling over a little bit.
Yeah, a bit like it's just the morning after, isn't it?
A bit like that, yeah.
All of that fun sport. Just a little bit more insight into the lines we brought you earlier about Orchel saying we won't seek a Commerzbank board seat. He goes into some detail. He's been speaking this morning at this Bank of America conference saying, in this specific case, I think it's inappropriate for us to have a board seat because we're also a competitor. I don't think that's correct. So that sounds temporary, doesn't it? Because he's describing himself as a competitor right now. That's with HVB. So they don't think it's appropriate to have a board seat. But if they, that doesn't mean that that's the...
Might have all the board seats soon.
Yes, exactly, at some point, if the story develops in a certain direction. But it's too soon for that.
He's definitely hedging his bets, isn't he? But he's got he has the ability to be able to do that at this point. This could just be a great investment. It could work out really nicely. It could be a great trade. Maybe that's all this is at this point in time.
Yes, absolutely. There are a lot of derivatives involved in getting to that 21%, and that's maybe where the story will be. Deutsche Bank CFO also commenting, saying they're focusing on themselves. A lot of news flow then coming from this Bank of America banking conference this morning. That is it for this hour of programming. We'll leave you with the Pulse. This is Bloomberg.
lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
European stocks dipped while Asian shares pared some of their earlier gains as investors mull the sustainability of China's rally. Middle East tensions ratchet up as Hezbollah fires a missile on Tel Aviv, while Iran's president tells the UN General Assembly that Israel's attacks on Lebanon won't go unanswered. Plus, SAP slumps as Europe's largest software company is investigated for potentially overcharging the U.S. government. Well, let's take a look at the European markets map this morning. What we saw yesterday was a strong rally across the board. The Stock 600 ending the day up more than 1% higher today. Some of that rally is subsiding. You can see a lot of red on the screen today. The FTSE down about 0.1%. The DAX very much in focus on 0.3%. We'll bring you some of the stories driving the performance today, or the underperformance, I should say. But for now, let's switch over and take a look at how these futures are faring. The S&P is pulling back as well, down about at 16 basis points this morning after locking in another record high for the year. It's 41st record high for 2024 for the S&P. And even though we're slipping somewhat, this market keeps going from strength to strength. Gold, another record high as well. We are tracking 30% gains for the year in the safe haven asset. Brent also stabilizing at around $75 here, keeping a close eye on some of the stimulus signals coming from China, as well as the geopolitical tensions in the Middle East region. And then the euro is slightly firmer versus the USD today, but not as much as some of its other G10 counterparts, namely because of some pessimism about the trajectory for the European economy as traders start to price in an even bigger probability of an October rate cut by the ECB. But let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Joanna Versace in London, and I'm in for Francine Lacqua today. Well, we're going to start off the show talking about some of those stimulus measures that came through from China yesterday. Big boost to markets. We saw a bit of a sugar rush, to quote some of my colleagues from opening trade. But this morning, some of that rally has started to fizzle out. I'm really happy to say that Johanna Kirkland, CIO and Global Head of Multi-Asset Investment at Schroders, joins me to discuss this and, of course, so many other things that are happening in markets right now. But maybe let's just start with your take on what we got out of China yesterday. Big stimulus package. We saw initially some positive reaction in global stock markets. Is it going to be sustained?
I think that it's certainly helpful to the Chinese stock market in particular, a very wide range of measures that they took on the monetary side. I think ultimately, in order to have a more positive impact on markets globally and, for the Chinese economy, we need to see more fiscal stimulus as well. And maybe that's on the way soon as well. But I would say necessary but not sufficient condition for recovery in China.
To what extent do you think, obviously we will talk about the US and Fed and the interest rate decision there, but to what extent do you think China is also going to be a driver for these global stock markets and performance from here? How important is it really for the trajectory of travel?
Well, I think that it's clearly been a headwind for Germany, for example, because Germany obviously relies on it as a crucial export market. So it is already having an impact, I think, particularly on the some of the European stock markets. Anybody who's exporting to China has been suffering as a result of weakness in China. So absolutely continues to be a key driver of markets globally.
Let's switch over and talk about the U.S. The Fed opted for a 50 basis point cut. Some people read that as perhaps a sign that the data is really going to start deteriorating in coming months. And other people are saying, well, anyway, they had to cut because we're coming from such a restrictive level. How do you see it?
I guess we're in the latter camp. For us, this is normalization rather than stimulation. They were running policy tight. I think they judged with inflation moving in the right direction that they could afford to start moving to neutral. So certainly I wouldn't see it as an indication or I wouldn't take it as a need to panic on growth. I think it's more a recalibration of policy reflecting the fact that they have more room for maneuver now that inflation's come down. And they're really focusing on that dual mandate, not just inflation, but also full employment.
Yeah, what I think is interesting about the U.S. is we're getting all of these data points coming through. Yesterday, the U.S. consumer confidence data surprised at the downside, and yet tracking GDP, and I recently looked at the Atlanta GDP tracker, still 2.9%. We are no way near recession levels. So is there any possibility at all that the data deteriorates so rapidly that we actually do end up in a hard landing situation?
Well, right now we don't see evidence of that in the sense that, yes, the employment market's softening, but it's still pretty strong. That ultimately consumers in good shape, and the corporate sector in particular is also in strong shape. So credit markets have been performing very well. So right now we don't put a high probability of a hard landing in the United States in 2025. So for us, as I said, this is a recalibration of policy. It's helpful. Yeah. It's good that the Fed is so focused on its dual mandate. That's quite helpful to markets.
I see you're underweight fixed income. Where do you see as fair value for 10-year treasuries?
Well, I think that actually that was more of a tactical position going into the Fed. I think one thing that we've been observing is that this market tendency to price very aggressive Fed pivots. I think they tend to be, we've seen a few goes at this. And that was really, that's why we were a bit underweight duration. And, we sort of managed to get a bit of profit out of that as we went through the FOMC. Generally, we have to recognize that we are slowing, so the environment is more supportive of fixed income. As I said, we're a bit concerned again about the aggressiveness of the pivot that's priced into markets at the front end.
There's certainly a lot priced in, 200 basis points by the end of 2025.
Yeah.
Let's round up the discussion talking about Europe. It feels as though the last couple of days have been quite pivotal in terms of market expectations of how the economy is doing. Those PMI numbers were a bit of a negative shock on Monday. Traders now pricing in, say, more than 60% chance of the ECB actually cutting rates in October. Do you think they will cut rates, and should they be cutting rates?
We think they should be cutting rates. I mean, they obviously have to keep an eye on inflation. They, again, have a different mandate to the Fed, less of a dual mandate, more focus on price stability. But I think there is room for maneuver here to cut rates in Europe, so that would be our expectation.
How are you viewing the investment opportunities in Europe, though? Because there do seem to be so many headwinds out there, be it from the auto industry, from the linkages to China, the potential tariffs on some of these EV makers, the slowdown in Germany, some of the banking stories that we've been talking about as well. Where do you see the opportunities?
I think it is still quite a challenging environment for Europe, as you say, particularly Germany is being sort of caught in the sort of wrong end of a number of trends. It used to rely on cheap Russian energy, it was exporting to China, so that combination is pretty difficult. So I think that there's still some challenges for Europe. I think we are starting to see some evidence of changes, though. For example, potential for cross-border consolidation. I think that is something that could be happening. So in general, I'd say from the bottom up, there's still opportunities, but as a top-down market, still very reliant on global growth, which means that typically we're favouring other markets rather than Europe.
And how are you viewing the UK in all of this? So we're going to be touching on Keir Starmer's speech later on in the show, but is there anything that stood out to you from that? Is there room for more optimism, relatively, looking at the UK economy?
Well, it's been interesting. This year, the UK has done pretty well. I mean, particularly when you compare it to other European markets, one of the best performing markets in the region. And I think that it benefits from a number of things. Firstly, what has held it back in recent years, you know, the complete absence of tech, a very old economy index. It's started to pay off now in a more value-driven environment. And generally, again, having had years of political instability compared to other countries in Europe, we're in a relatively more stable place. I guess we had the sort of vaccination of the gilts crisis as well, which has led to maybe more fiscally responsible policies here in the UK. So generally, I think the UK does look interesting. It continues to look cheap. And certainly there are opportunities here.
Yeah, well, that's a good place to leave it. Thank you so much for joining us today on The Pulse. That was Johanna Kirkland, CIO and Global Head of Multi-Asset Investment at Schroders. Thank you. Well, coming up, Israel intercepts a missile heading towards Tel Aviv. Hezbollah says it was fired at Mossad headquarters. We'll have the details next. This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back. Hezbollah says a ballistic missile fired towards Tel Aviv was aimed at Mossad headquarters. It follows days of intense Israeli airstrikes in southern Lebanon, in which more than 500 people have been killed. In his first address to the UN General Assembly, Iran's president accused Israel's allies of hypocrisy.
The responsibility for all consequences will be borne by those governments who have thwarted all global efforts to end this horrific catastrophe and have the audacity to call themselves champions of human rights.
Well, in a short moment, we are going to be bringing in our colleagues, Bloomberg's Paul Wallace in Dubai and Mark Champion, international affairs columnist at Bloomberg Opinion. In fact, they both join us right now. Paul, let's just start with you. Bring us up to speed on all of the events over the last 24 hours, ongoing airstrikes. This morning, we're hearing of a missile that was intercepted, directed at Tel Aviv. Bring us the latest.
Yes, these attacks by both Hezbollah and Israel are continuing in a very aggressive style. That missile you mentioned that was aimed at Tel Aviv, Hezbollah says it was aimed at Mossad's headquarters in the city suburbs. It's actually the first time the Israeli military is saying that Hezbollah has fired a missile at Israel's commercial capital. So I think that just underscores what a dangerous point we're at. Israel is continuing to hit southern Lebanon and other parts of the country today, and it's implying that there will be no let-up. I think it's quite clear now that Israel is very much intent on carrying on this bombardment until it sees signals that Hezbollah is willing to move its fighters away from the border area.
Yeah. Mark, let me put this question to you. On Friday, you penciled an article which was quite interesting. You said Israel's plans for Hezbollah are becoming clear, where you make the case for a ground invasion not being imminent, saying that the aim appears to restore deterrence and degrade Hezbollah to the point where it is incapable of continuing with rocket and missile attacks into Israel. But of course, today, you're seeing a very defiant Hezbollah, and even yesterday, Israeli military was saying that Hezbollah fired over 300 rockets into northern Israel. So there doesn't appear to be signs of Hezbollah backing down. Does this make a ground invasion more likely?
It does. I mean, the other thing I said in that piece is that, the flaw in the Israeli plan is that, as so often in these cases, the other side gets a vote and tends not to do, what it is that you're trying to, you want them to. So that is sort of what's playing out now. And you can describe this entire, operation really as a very successful shaping operation, which gives the Israelis the, would lay the ground for a potential ground invasion if they want to go that way.
Yeah.
I still don't believe that it's something that they want to do simply because they've tried this before and it's been very painful.
Yeah, well, so let's talk about them trying it before. The last direct war between Israel and Hezbollah happened in 2006. It lasted 34 days. But at the end of it, a resolution was passed called the UN Resolution 1701 that stipulated that Hezbollah have to lay down their arms and retreat from the border. Of course, that did not happen. Hezbollah has not respected that resolution. What would change the catalyst this time around for a resolution like that to actually be adhered to and implemented?
Well, it would be the fact that Hezbollah felt that it was had to move back. So either because it's persuaded to, because it is suffering so much damage. Even with the missile that was fired at Tel Aviv today, that missile was shot down, whereas the Israelis are acting with impunity over Lebanon, which gives you an idea of the kind of the difference in the technological strength of the two sides. But so either they would have to back down, or as a result of a ground invasion, they would be driven out. And the Israelis have occupied southern Lebanon before for 18 years. So they know what's involved, and they know how sticky that can be and how unsatisfying.
Paul, while all of this is taking place, there is the UN General Assembly also happening in New York, and many people were watching out to hear from the Iranian president yesterday, Mr. Pezeshkian, first time addressing the UN General Assembly. But again, interesting comments there. He was saying it is imperative the international community should immediately stop the violence and bring about a permanent ceasefire in Gaza. It sounds as though Iran are washing their hands, from the situation that's happening in Lebanon, even though Hezbollah is very much Iran-backed.
Yes, I think so. As you've noted, it's very much Iran-backed. And not only that, it is the most important of Iran's proxy militia groups in the Middle East. Some people say it's Iran's first line of defense against attacks or potential attacks by Israel. So if this escalates and it comes to a point where Hezbollah's existence as a military force is in question, then a lot of people think Iran would have to act, or at least a lot of elements within the Iranian military and government would see it that way, that they just could not let Hezbollah be defeated as a military force. As you noted, those comments at the UN General Assembly from Iran's new president, Masoud Pezeshkian, sort of underscore how Iran really doesn't want to get involved in any kind of deep conflict with Israel or the US right now. And Pezeshkian has been saying since he got elected a few months ago that he wants to improve relations with the West to try and get sanctions eased. So I think from his point of view, he certainly doesn't want to get involved. But as I said, if it comes to that, there will be a lot of people within the Iranian government and military saying we have to save Hezbollah. We simply cannot let it be sort of smashed to smithereens.
Yeah. And Paul, attention now moves on to the Israeli Prime Minister Benjamin Netanyahu's speech. He is scheduled to give a speech on Friday. What are we expecting out of the Prime Minister?
Well, he's delayed his trip because of these hostilities with Hezbollah, and he's going to be on the ground for a much shorter period than he initially hoped. I think just 36 hours now, according to his latest schedule. He is most likely going to talk about Iran, as he keeps doing in his public speeches of late, and emphasizing to a world audience and an American audience how Iran is an evil force as he and his government see it, and they're essentially trying to surround Israel with these proxy groups to eventually launch from October the 7th style attacks on the country. I think he's also going to try and shore up support for Israel as this campaign against Hezbollah continues, because as Mark has mentioned, there are a huge number of fatalities in Lebanon so far. That is of huge concern to many world powers. So I think he's going to try and just say Israel is doing this because it has no choice.
Bloomberg's Paul Wallace and Mark Champion from Bloomberg Opinion, thank you so much for joining the show today. Well, coming up, tech firms, including German giant SAP, are currently being investigated by U.S. officials for potential price fixing. That story is next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade. You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
SAP shares have fallen the most since early August after Bloomberg reported that the software maker is amongst the companies being investigated by the U.S. for potentially conspiring to overcharge government agencies. Let's get the details with Bloomberg's Karen Matusik, keeping a close eye on how the stock is trading this morning, down 4%. How did this all come to light?
It came to light more or less by accident because there was, in a court docket in Baltimore, there was a filing in a case between the U.S. government and Carahsoft, a software reseller which is also being probed. They received a subpoena at some point to produce some documents, and apparently, at least in the eyes of the government, they didn't fully comply with it. They didn't hand over the documents that were requested. So the government started this litigation, and in those court documents, even though some of them were redacted, there's the probe against SAP and the others is being lined out there. That's how we know it.
I mean, so far it's been a pretty strong start to the year for SAP. The stock is up more than 40%. Obviously, this morning we are ticking lower, down 4%. But when you look ahead, how big are the risks for SAP?
Well, you know, being in trouble with the U.S. government is really isn't fun, and a lot of German companies have experienced that. Remember VW, the big thing about the diesel scam, and for those people who are around for a long time, Siemens is another example. That's almost 20 years ago, but they can levy hefty fines. I mean, we don't know we don't have enough information how likely such a fine is at the moment, but the U.S. can impose in this price regime cases can impose 3 times the damage they actually had. So that could, you know, depending on how much sales are being covered here, that could be a hefty sum. And of course, investors are concerned, especially as they don't know how big the extent is. And SAP hasn't yet commented on anything here.
Well, certainly an important one to watch, given its outperformance versus the rest of the market this year. Bloomberg's Karen Matusik in Berlin. Thank you so much. Well, Caroline Ellison has been sentenced to 2 years in prison by a federal judge for her role in the collapse of FTX. Ellison was previously a top executive at the firm and admitted charges of wire fraud. She also testified against founder Sam Bankman-Fried and was ordered to forfeit more than $11 billion. And coming up on the show, Beijing says it opposes a possible U.S. ban on Chinese car software amid a wider row on tariffs. We'll discuss Europe's car market with the Director General of the European Automobile Manufacturers Association. That is next. This is Bloomberg.
names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning and welcome to The Pulse. I'm Joanna Bersecci in for Francine Lacroix in London, and these are your top stories. European stocks dip while Asian shares paired some of their earlier gains as investors mull the sustainability of China's rally. Middle East tensions ratchet up as Hezbollah fires a missile on Tel Aviv, while Iran's president tells the UN General Assembly that Israel's attacks on Lebanon will not go unanswered. Plus, SAP slumps as Europe's largest software company is investigated for potentially overcharging the U.S. government. The CEO of UniCredit has said he doesn't want a seat on the board of Commerzbank despite increasing his stake in the German lender.
We are an investor, okay? Number one, I usually do not believe in investor having board seats. And in this specific case, I think it's inappropriate for us to have a board seat because we're also a competitor. I don't think that that's correct.
Ongoing story in the European banking space, but Andrea Archel has been sharply criticized by Germany for the way UniCredit has gone about acquiring its holding. Bloomberg's Oliver Crook joins us from Berlin. First of all, we just got these comments from Andrea Archel just a short while ago. What do you make of what he had to say vis-a-vis saying we are investors, it's inappropriate for us to have a board seat because we're also a competitor?
Yeah, Jemana, it's really interesting. Obviously, everything that Andrea Orchel is going to say in this period of time is going to be closely watched by shareholders, by everybody in banking, by the government. And so for him to say that, I think it's interesting because he made a couple other comments. And I think what is really interesting here, Jemana, is what he kept talking about in this conference at the Bank of America conference. He was talking about how profitable UniCredit is, right? He was talking about how they're actually going to boost their dividend payouts from 50% to 40%. And if you're a shareholder in Commerzbank and trying to make money, take a look at what you've got on screen here, the return on common equity of UniCredit versus Commerzbank. If you have sort of Andre Orchel as a CEO, look at how much more money you are getting back as an investor if you are an investor there. And throughout this whole discussion, Jemana, we've talked a lot about how the German unions have reacted, how the German government has reacted. We know a lot less about how the other shareholders of Commerzbank feels about this. And of course, they're going to play a critical role in this. Yes, the German government can hold on to their stake there, but it sounds a little bit to me, Jemana, like he's speaking directly to shareholders and saying, listen, if you want to make money, you know where this bank should be.
Yeah. What about from Commerzbank's perspective? They've announced a new CEO. Obviously, that is the current CFO, Bettina Orlopp. Is that going to make a difference at all? Is there anything that Commerzbank can attempt to do to fend off this prospective bid by UniCredit?
Yeah, I think fundamentally it does make a huge difference, in part because you can't go into a war or a battle without a general. And basically we had the outgoing CEO the day before all this sort of news broke that UniCredit was making this move on Commerzbank. He had said he did not want to renew his contract. So we were in a position here where you need to have strong leadership at the top of Commerzbank so that you can deal with whatever comes, and you need to be able to present your vision for what the future of this bank is. And it needs to, by the way, for shareholders to be a better vision than what is being proposed by Andrea Orchel. So what you have now is Bettina Orlopp, the former CFO or the current CFO, now outgoing, who has been CFO since 2020. She's been at Commerzbank since 2014, and she's going to be taking on that role. And it's going to be coming at a very challenging time, Jumana. You know, they say that the strongest steel is forged in the hottest fire, and that is certainly the fire that Bettina Orlopp is coming into right now.
Absolutely. Bloomberg's Oliver Crook in Berlin, thank you for bringing us the latest on that story. It's certainly not going away anytime soon. Well, Volkswagen has started negotiations with unions over possible job cuts. Tensions have been rising since the car maker said it was considering closing a number of factories. Analysts at Jefferies reckon VW is looking to cut around 15,000 jobs globally. And China says it opposes proposed U.S. restrictions on Chinese car software, calling the plans, quote, economic coercion. This as sources say the EU and China have agreed to continue negotiations on tariffs even if member states vote to impose levies on EVs. One Chinese electric vehicle maker, NIO, has weighed in on the debate, saying moves to levy tariffs on EVs are unreasonable. So for more on the European car market, we're joined by Sigrid de Vries, Director General of the European Automobile Manufacturers Association. Thanks so much for joining us this morning. Let's just start with an overview of the sector, because clearly the European automaker industry is in a state of malaise. You hear warnings from various automakers on margins, on sales, on some of the declining profitability of their electric vehicles units. What do you think is going on here? Why are we seeing this downward pull in the European automobile industry?
I think there's a number of things colliding. So we're still, in terms of volumes, production, around 20% below levels of the pre-pandemic period. So we're missing more than 2 million vehicles in the market, in the factories as well. So that creates a lot of tension, and on top of that, the war in Ukraine, also price of the cost of living crisis in a number of member states, high energy costs, high competition. I mean, it's all coming together at the same time. We sometimes call it the almost perfect storm happening together, and we need to deal with that. And I think now, also with the green transition moving from paper to reality starts to hit, and we see how difficult it is to not just have mandates, regulatory mandates, and models on the market, manufacturers making cars, but also needing a market to pull. And that's what we are missing at the moment in Europe.
Yeah. There are fears over the shutting of more factories, and indeed we heard from VW today. What can be done to prevent that from happening? Is it your expectation that more factories are going to be shut? And certainly, what sort of a role do you think the German government has to play here? The economy minister has talked about doing something potentially to help stabilize the industry.
Absolutely. I think it's crucial that these talks take place at member state government level, but also here in Brussels, the European Commission and the other institutions. And I think it shows that them taking this issue so seriously, that there is real growing acknowledgement of the problems, the issues that we face as an industry. And it's predominantly about making this transformation to green mobility, electrification, where you do not just need to change from one to another technology, but you really need to make this mindset shift with consumers being able to use these vehicles. So you need the charging infrastructure, you need the cheap and green energy. You also need the whole value chain to be ready in Europe and to being able to also deliver at a profitable level, competitive level. So, and that brings me to the regulatory framework that then also comes into play and needs to really fit well. And all these dimensions ideally be synchronized, which they aren't at the moment. And you see that in any transformation. I think no one expected this ever to be, a smooth ride or a straightforward transition. But as I said, reality is really starting to hit. And we see where governments, institutions may need to take some action to make this a smoother ride. And there is a lot at stake.
Yeah. Well, I know that you are seeking a relief package on those 2025 CO2 targets. How are discussions progressing there?
Well, at the moment, we're having lots of talks. We're informing policymakers about what the issue is, what the concerns are, what the background to these concerns is. So we're doing a lot of explaining. People have a lot of questions, and understandably so. So that's where we are, and of course, then we're also gauging the sentiment, the atmosphere. But there is a lot of recognition. We really see they take it very seriously. There is an understanding that things need to work better together. We want this transformation to work as industry, and we are delivering with models coming into the market. But the other dimensions of this transformation are really not delivering at the same pace and at the scale that they need to be.
Yeah. Let's talk about tariffs. There are ongoing discussions as we speak right now between China and the EU about the possible proposal out of EU member states to start imposing tariffs of up to 50% on some Chinese EVs. If that does actually pass, would that be a tailwind? Would that provide an opportunity for European automakers simply because there'll be less competition?
Yeah, as I say, we don't really take a position on this actual case. What I will say, though, is that for the auto industry, fair, free global trade is tremendously important. And so are good and stable relations with China. It's an illusion to think that we can decouple from China. We need the materials, the components, also the technology, but the Chinese also need us when it comes to auto manufacturing and making advancements there. We also need a level playing field. So if there were to be any distortions, and we of course trust the Commission makes a very thorough investigation, then measures can be taken as well. But I mean, this is such an important illustration again of the changing world where competition is growing, where new dependencies are created and also need to be managed in terms of risks and supply chains. And I think most importantly, and this also came from Mario Draghi's report on the competitiveness of the EU, is that the EU needs to be able to be strategically autonomous, resilient, competitive, flexible, and all of that. And that's where the EU needs to do a lot of catching up. And the EU industry, being one of the most important industries in Europe, is, I think, at the front line of this whole transformation.
Okay, in light of everything that we discussed, and given some of the headwinds on the rollout of electric vehicles, do you think that automakers will have to change the timeline of how quickly they're going to move away from combustion cars, ICEs, simply because the demand isn't there for EVs?
Well, the law is the law, so you need to meet your targets. But in the end, it's consumers, customers buying the vehicles, needing to take their wallet out and making that purchase. And they need the confidence in using these vehicles across Europe in this case. I mean, in some member states, it works really well. They are advanced with charging infrastructure. They've delivered on purchasing and other fiscal incentives. But there are many EU member states where that isn't the case. So you see a lot of diversity in terms of where member states are, whereas manufacturers are faced with sales targets and averages across Europe. So they will need to make adjustments. They will need to really feel what the consumer wants. And that is their main preoccupation in a way. But at the same time, they also need to meet regulatory targets. And that's exactly, I think, where we need to talk with legislators. The direction of travel is very clear towards decarbonized mobility and electrification being the predominant technology. But we also need the other enabling conditions to be in place to make that transition work.
Right. Well, thank you so much for your time today. Really interesting to talk to you. That was Sigrid de Vries, Director General of the ACEA. And coming up, Keir Starmer says he's ready to take tough decisions that will make him unpopular. But has the UK PM overdone the doom and gloom? We'll discuss that next. This is Bloomberg.
what's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
UK Prime Minister Keir Starmer says he is ready to take tough decisions that will make him unpopular as his government looks to tackle challenges facing the economy. He told his party's annual conference his program remains unchanged despite a slew of setbacks early in his premiership.
That if we take tough long-term decisions now, if we stick to the driving purpose behind everything we do, higher economic growth, so living standards rise in every community, our NHS facing the future, waiting lists at your hospital down, safer streets in your community, stronger borders, more opportunities for your children, clean British energy powering your home, then that light at the end of this tunnel, that Britain that belongs to you, we get there much more quickly.
Well, let's get more from Bloomberg's Lizzie Burden, who is in Liverpool. Lizzie, well, it was a one-hour speech. What was the reaction to his speech yesterday?
Jemana, it was raucous in the room, but I guess that's not really what matters. It's what's outside this arena that really counts. So this was Keir Starmer's first speech as Prime Minister. And of course, after that victory, you would have so much applause in the arena. There was a lot of lofty rhetoric, a repeated reference to the Labour way. He said he's not going to give anyone false hope. So clearly a contrast to Boris Johnson's boosterism. And indeed, a lot of the speech devoted to the Conservatives, looking backwards rather than to explaining the Labour present and what's to come in the future policy-wise. But look, that doom and gloom narrative is really already weighing on consumer confidence. It's weighing on the polls. Ipsos saying 6 out of 10 Britons aren't happy with this government. And I think it's notable that Keir Starmer has already packed his bags and gone to New York for the UN General Assembly meeting. That's earlier than is usual for a leader at Labour conference. And perhaps it shows that he's got an easier ride on the international stage than he does on the domestic one. He looks like he's open to meetings with Kamala Harris and Donald Trump.
Let's just bring it back to domestic policies. And I'm curious to hear whether the messaging we heard yesterday is in line or mirrors the messaging that we heard from the rest of the cabinet as well. Are they being consistent with their messaging here?
Yeah, they did echo the recognition that it had been a bumpy start to the Labour rule. Take a listen.
In any government, it's a big shift from opposition into power. You'd imagine a little grinding of the gears isn't unusual.
From the budget in October through to the spring in 2025, those stable foundations on policy and public spending will be set for the rest of this term in office, and we will not return to the behaviour we had under the last Conservative government.
Whenever you have a budget and when you have, if we're being frank, a dire fiscal inheritance in terms of what we have been bequeathed by the previous government, you will get budget speculation.
So you heard there from the Environment Secretary, Steve Reed, kind of acknowledging that there have been stories about infighting at number 10 Downing Street and freebies, but that's normal, he says, for a government that's transitioning from opposition to power. You heard from the Business Secretary, Jonathan Reynolds, there, saying that speculation before a budget is normal as well. And Darren Jones explaining that some of Keir Starmer's tough long-term decisions, as the Prime Minister would put it, are going to apply to this £22 billion fiscal black hole that they need to fill. But what it really underscores is that if you leave a policy vacuum, as they have, the newspapers are going to fill it with negative headlines, and the speculation is frustrating to business. I spoke to Johnny Reynolds about tax rises potentially in the budget and whether that's going to drive away wealth creators. He says that's too dramatic. But actually, we've had a fantastic big take on the terminal. I recommend a read of it about people in private equity who are looking to flee Britain because of these potential moves. A survey by S&P Global says that businesses are putting off investments because they're nervous about the details in the budget. But there isn't a lot of detail here to give you from Liverpool, Jemana.
Yeah, well, good tease for the big take. In case you didn't catch that, you should definitely check out the big take on the terminal. Thanks to Bloomberg anchor and UK correspondent Lizzie Burden. Well, coming up, another headache for Boeing. The company's offer of a 30% wage hike is firmly rejected by thousands of striking workers. We have the latest. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Was going to keep Rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Pointing out when it comes to the climate, every time I talk about it, whether I was trying to convince labor or business to come along, I'd say, I think climate, I think jobs. I think jobs, and I mean good union-paying jobs. In fact, I'm proud to have kept my commitment to bring unions and business to the climate table. That's what we're seeing.
We made a commitment about running our data centers 24/7 on carbon-free energy, and there are a number of components to that. We're continuing to invest in renewable solutions around the globe, but I also want to say that one of the very important parts, we, like others, are investing substantially to improve the efficiency of compute, and you're seeing it in two places. You're seeing it in the chip side, hardware, and you're seeing it in models.
President Biden there and Ruth Porat, President and Chief International Officer at Google, both speaking at the Bloomberg Philanthropies Earthshot Prize and Global Business Forum in New York. Well, the union representing 33,000 Boeing workers on strike have rejected the company's latest proposal to hike wages by 30%, describing it as inadequate and disrespectful. The standoff comes with Boeing stock under pressure, having tumbled around 40% this year, the second worst performer on the Dow Jones. So let's bring in Bloomberg senior aviation reporter Sid Phillip. Good to have you with us on the show. We've been tracking the story very closely. The offer put forward by Boeing has been rejected once again. What are the key issues here?
Morning, Jemana. So the biggest issue for the workers has been the fact that Boeing went to the workers directly. In the latest offer, they went directly to the workers instead of going through the union. And that's been a big problem for the union. And the union termed that disrespectful. And they also came back and said the workers were not ready. They did a survey of the workers, and the workers were not ready to accept the latest offer of 30%. So they've said that they're willing to go back into negotiations, mediated or otherwise, directly with Boeing. But they've said that this offer is not going to stand.
Yeah, I mean, it just seems to be another cloud hanging over Boeing. The walkout started on September the 13th. It's ongoing. How much of an issue is this actually posing for Boeing?
It's a huge issue because for Boeing, their biggest cash cow is the 737 MAX, which is built in the Seattle area, along with the 767 and the 777. And so unless they're able to actually deliver aircraft, they aren't going to get cash. And for Boeing, they've been bleeding cash. They've burned through $8 billion of cash in the first half of the year. Wow. And they are burning through cash as they sort of aren't able to deliver planes.
So stock is down 40%. They can't deliver planes. There is a new CEO in town. How's he going to turn things around?
Yeah, so for the new CEO, the biggest challenge is trying to get this sort of strike resolved and then get plane deliveries back on track, which will bring in vital cash for the company. And, I mean, they can then start chipping away at their massive debt pile. Because, I mean, they've also been threatened with a downgrade by the rating agencies as well.
Yeah.
So lots of problems for Boeing, and they really need to be able to get their production back again and then start delivering aircraft in order for them to actually be able to get through this.
And you've got to think that resolving this walk-off is going to be a top priority for
Absolutely.
management. Yeah. Sid, thank you so much. That was a Bloomberg senior aviation reporter, Sid Phillip. Well, a quick look at European markets before we head out, because some of the positivity that we saw yesterday in reaction to the China stimulus package has started to be unwound. And there you have it in front of you. These indices are slipping into red as we head into the U.S. session. So the DAX is down 0.5%. CAC 40 also down a similar amount. The relative outperformer, though, is the FTSE in the UK, up about 0.8% today. But up next, Bloomberg Brief with Danny Berger in London today and Manus Krani in New York. This is Bloomberg.
what about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny with Danny Berger in London. You're welcome to Bloomberg Brief. Let's say your agenda.
Yet another all-time high. Stocks and gold break records. Two-year yields drop to the lowest in 2 years, with bets rising on consecutive jumbo rate cut. Threat and cooperation. Iranian president delivers dual messages at the UN as tensions in the Middle East ramp up. And another DOJ probe. U.S. officials investigate German software firm SAP for potential price fixing. Good morning, Manus.
Danny, good morning. We're back to that land of it's a 50-50 on whether they'll go for another 50 basis points in one of the last two meetings of 2024. Right now, there's just a mini reprieve in these markets, 41 record highs on the S&P 500. NVIDIA, of course, managed to deliver over $100 billion swing yesterday, taking the NASDAQ up. There are more calls for 6,000 on the S&P 500. David Costin over at Goldman Sachs joins the echelons of BMO and Evercore in terms of making that call. How much money do you put down on the consumer confidence being at a 3-year low? The call on that number was before the rate cut, but it is a 3-year low. Don't worry. BMO say, don't worry about consumer confidence cracking until the consumer stops spending. Roll it over, have a look at the bonds, because what you've got here in the bond market is a 2-year low on the 2-year paper. And again, this is the kind of pressure very much at the short end, the continued steepening that takes place. There was a nice auction yesterday on this $69 billion worth of 2-year paper. Today you get $70 billion worth of 5s. So it's the stumble in consumer confidence. Fear not, Danny.
Well, we also have some breaking lines on the OECD, Manus. They're giving out their growth expectations. For U.S. GDP, they see it rising 2.6% in 2024. That is unchanged from their last estimate. They see it, though, at 1.6% in 2025. That is a downgrade. Previously, they expected 1.8%. Just to quickly run through their other expectations, China GDP, 4.5% this year, 4.5% next year. For the euro area, noticeably weak than the others, 0.7 this year, 1.3 in 2025. So, Manus, I think one of the takeaways here is this downgrade to U.S. growth, not for this year, but for next year. So it's this expectation of not a recession, not slowness, but slowing to come.
And in many ways, this risk on in the equity market is more fixated on the sustenance of growth and the continuation of growth here in the United States, rather than necessarily the rate cuts that we get coming through, Danny. But I'm hanging my hat on BMO's view, which is we don't need to worry about this consumer confidence number, because until they stop spending, keep on running.
What is it, the hedonism? Are we going back to that?
Oh, poor old Paul Donovan. We'll murder that for the whole of 2024, won't we? The hedonism of... yours is hedonism, mine is hedonism. Hedonism of the U.S. consumer.
You're one of them now, Manus. That's all I will say.
I'm all in.
The warnings about growth or weaker growth tie in really great to our next guest, to Max Kettner's view, because he's been writing about growth. But on the other side of things, because there are these expectations maybe for weaker growth, he says with the likely more aggressive pace of Fed and perhaps global rate cuts, there could be a non-negligible risk of a growth uptick and threat to the disinflationary progress in the coming quarters. I'm pleased to say he joins us now. He's the chief multi-asset strategist at HSBC. Max, wonderful to see you in person. So you're warning that growth could have an uptick as others are fearful of growth. What looks the most mispriced if this is the case, that growth could be higher than expected, as with inflation?
Yeah, I think there's a couple of things. When we look at short-term inflation expectations, you look at, for example, one-year CPI swaps, that's still barely 2%. That clearly is not factoring in any kind of perhaps a pickup in inflation, or not even a pickup in inflation. Inflation just staying a little bit stickier, right? So we don't have to see a big pickup in inflation. Just in terms of your question, in terms of what is being mispriced, we don't have to see that. It just needs to be a tad stickier than thought. And already we would see short-term inflation expectations really mispriced. I think it's also some parts of the cyclicals and equity market. You know, when we look at materials, you look at energy as well. You know, we had these China demand concerns 2-3 weeks ago around oil prices. I think that's a bit misplaced, because when you look particularly also at positioning in oil, look at Brent net longs. I mean, we're a net short now for the first time in history. So, you know, how do you want to be utterly bearish on that still when everyone's given up on that already? So there's quite a few, I think, cyclical things, short-term inflation expectations that do look quite attractive now. And overall, of course, when you look at equity markets, if inflation stays a bit stickier, but it stays stickier because of growth, it stays stickier because spending continues to run at a solid pace, that's really good for earnings, that's really good for equities.
So if it's a really good narrative, stickier inflation, Max, good morning to you. You see no risk of that stickier inflation causing the Fed potentially to do some kind of a pause or maybe even a U-turn. Do you just stay long until they blink?
I think that's it. Yeah, that's absolutely it, Manus. I think a month and a half ago, I think I would have answered that question a little differently. I think you would have been like, you know what, maybe they tread carefully in the beginning. Maybe they'll do a sequencing of 25s, and then they'll pause and they'll see how this is feeding through into the economy, how inflation, how super core services inflation are evolving, how perhaps the goods disinflation, how that is dissipating, how all of those things are evolving. But I think there's two things that really happened. We've had Jackson Hole, where in Jackson Hole, really Powell made it very clear we don't welcome any more weakness. So in other words, sort of 25 basis point cuts are now the base case. And if we were to see more labor market weakness, for example, if the next payroll number is below consensus, suddenly, you know, the 50 basis points is fully back in play. And that, of course, you know, it's sort of an almost any news is good news kind of setup, where you say, well, you know what, if currently consensus for the payrolls is 130, if you get 180, great. It means the economy is doing better. You could buy a bit more cyclicals. You could be more bullish on the cyclicals. If you get a downside surprise, it might be negative on maybe a day, maybe two. But then I think very quickly we'll realize, well, that just means we now get, instead of a 25, we get a 50 basis point cut perhaps. We price in that, we get more valuation tailwind, and then you're going to have to start buying those dips and risk assets very, very quickly.
So just to be clear, in a scenario where you do get good data, you do get stronger data, does a rally continuing hinge on the idea that no matter what, the Fed will be cutting by at least 25?
I think so. I think the next 4, 5, 6 meetings, they made it very clear, right? Think about it last week with the Fed. Effectively, we had retail sales, industrial production, housing data, the 3 regional Fed surveys, CPI, PPI, everything above expectations. So you sit there. I mean, I was in New York last week. We were talking about it, and we're like, why would they do 50? That doesn't make sense. No, like you start 25, you can say, well, if things change a bit, if they get a bit worse, fine, we'll do 50, right? We may accelerate. We stand ready to do more, fine. But like all the data, all the short-term data really didn't tell us, oh yeah, you need to come rushing out of the gate. Absolutely not, and they did it. And that, in combination with Jackson Hole, really tells us probably 25, the next couple of meetings, is the default, right? That's really the default. So that tells us, look, I mean, if you want to be bearish in an environment where GDP growth is running at 3%, where the nowcasts are saying 3%, where the high-frequency data, look at the Fed's weekly activity index, still 3%. Look at the Chicago Fed's retail, the weekly retail sales, still going up. I would discount those consumer confidence numbers yesterday as well, because frankly, if you look at the last 4 years, they haven't told us anything. They haven't had any correlation with spending data, so meh, don't really care.
Well, don't worry about that consumer data, because Danny and I are spending. We're all in.
You guys are going to spend like crazy. Yeah, we're going to spend. I mean, to be fair, Manus, to be fair, my entire view basically hinges on you two basically spending the hell out of the U.S. economy.
That's a horrible idea, to base any view on what Manus and I do. I think we're too erratic to kind of pin that down, Manus.
that is a stretch out there. But you are reaching for risk, Max Kettner. We know you're bullish on equities. That's fine. Given what you've just said about the landscape, this then reinforces your uber bullish view on reaching into the dark end of junk.
Yeah, I think so, because effectively now, think about the last couple of years on Jackson Hole. 3 years ago, they did tell us, okay, you know what, inflation is transitory. 2 years ago, they said there will be pain. Fed put is done. Last year, it was higher for longer. Now they tell us, well, actually, if there's more weakness, we're going to do even more. So we're going to cut anyway, or we're going to cut even more. So effectively, they're telling us we're putting on a floor under the most stressed part of the economy. So you look at things like small caps, you look at low quality, look at how much triple Cs have rallied in the last couple of weeks, right? So that really, those kind of junkier assets or the higher risk assets, they really can stay in vogue for a bit longer now, until perhaps at some point in next year, we may find out that the US economy has re-accelerated, that perhaps inflation is still too sticky, and the Fed may have overdone it. That clearly is a risk, but certainly not for the next 2 quarters.
In the equity market, though, and you alluded to this in one of your answers, it has been more defensive type stocks that have done well. It's been utilities, it's been consumer stocks. Utilities up 6.2% in the past month. The S&P is less than 2%. What changes that the contour that it's everything rallies and it's the riskier type stocks too, and it's not just defensive and utilities leading the way?
Look, I think the defensive rally has mostly been a rally that's been driven by rates and by yields, right? So when we look at utilities, staples, healthcare, all those really, or real estate in particular, also REITs on the equity and the credit side, that's really started rallying from mid-July, from the July CPI number. So it was really a yield-driven rally. So if you are of the view that perhaps yields have to reprice a bit, or maybe that inflation expectations have to go up a bit, some of those bond proxies are probably not the best place to be at the moment. Utilities are maybe a slight exception to that, because they obviously also have the AI story now attached to it.
They're literally everything to everyone.
It's crazy, because you now not only have the defensive characteristics, but you have the data center and the AI story attached to it. So it may be a slight nuance to that, but I don't think it's really the best place to be right now, to be in the bond proxies. What do we need? I think, we just basically need the market realizing, look, those 25s, they are going to be really the default for the next couple of quarters, right? So the next 6 months, the next sort of 4, 5, 6 meetings, it is going to be that sequencing of cuts. It's very unlikely that the Fed makes a very aggressive U-turn and says, oh, hold on, we were actually wrong. We need to pause now. It's quite unlikely that that is going to happen in the next 6 months. And then that, of course, is really good, because, again, we're bouncing off GDP growth 3%. The nowcasts say 3%. Look at earnings expectations for Q3. I think that's another factor that we should look at in terms of how the rally can spread out. In fact, for Q3, earnings expectations quarter over quarter sequentially are either flat or slightly down in all the sectors in the S&P, except for utilities, but that's the Q3 seasonality, right? So air conditioning and all that. And for tech. but that we know that, right? We know that story around tech and AI and CapEx, but everything else is pretty subdued Q3 earnings expectations. So one of the things that I think can really drive it is if we go now into the Q3 earnings expectations, people are pretty subdued, you know, pretty cautious still at the moment when we look at our sentiment and positioning indicators. Interestingly, you guys were talking about another all-time high at the beginning.
Yeah.
Yep. Funnily enough, our sentiment and positioning indicators are still closer to a buy signal rather than a sell signal.
So there's still miles to go in this.
Decent earnings expectations.
There's still miles to go in this rally. You know what, Max? I just hope that whoever's looking after my pension has a half a glass of the enthusiasm that you've got for these markets. That's all I can say, because I want a bit of that bullishness in my life. Max Kettner, keeping it real in the full bull across your assets on Bloomberg. Other stories trending on your Bloomberg terminal this morning. Warren Buffett's Berkshire Hathaway sold another $863 million of Bank of America holdings. That brings Berkshire's stake to 10.5%. Now, Berkshire would need to disclose trades in Bank of America within days for as long as the stake remains above that 10% regulatory threshold.
Cybersecurity startup Wiz is in discussions to sell existing shares at a valuation as high as $20 billion. That's according to people who are aware of the talks. Last July, Wiz had turned down Google's $23 billion takeover bid. It decided instead to go public.
Caroline Ellison was sentenced to 2 years in prison. The former CEO of Alameda Research was charged with fraud and money laundering after the collapse of the crypto exchange, FTX. The judge presiding praised Ellison's cooperation in helping prosecutors convict FTX chief Sam Bankman-Fried, but Ellison was handed jail time to deter others from similar conduct because cryptocurrency fraud is easy, he said.
Coming up, the DOJ is ramping up its probes and now reaching to Europe. German firm SAP under the spotlight. We're going to give you that story next on your Bloomberg Brief.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Brief, I'm Manus Cranny, alongside Danny Berger. Stock of SAP is dropping after Bloomberg reported that the U.S. Department of Justice is probing the German software for potentially conspiring to overcharge the government agencies here in the United States. The DOJ is probing Carasoft, a top technology vendor to the government. Let's get the latest. Oliver Crook is standing by. Ollie, good to see you this morning. How did this come to light? I mean, what's the scale of the business that SAP does here in the US, and how does it fit in with the other company?
Yeah, so listen, it's several billions of dollars worth of sales of software to the government that SAP does over in the United States. And how we sort of came across this was within a filing, and we understand the DOJ hasn't yet brought the case, but is looking into it, just looking into it at this stage, about whether or not SAP is involved in sort of rigging for pricing for software sales to the government. Why it's important is this company, Carahsoft, is sort of a third-party reseller that deals with a lot of these companies. We should say it's not just SAP involved here, but this involves, you know, potentially up to $2 billion worth of sales since 2014 to the U.S. military, to the U.S. government. And again, we should just stress that right now they're just looking at it. This is a civil investigation. Many of these end without any sort of accusations of wrongdoing. However, Manus, if they do find something wrong and they say that there was a fix-in on the bidding, that is considered fraud. And of course, that's enough to freak out investors a little bit today with the stock trading lower.
Well, you also have just the past, 12 hours where it feels like we've been inundated with antitrust action from the DOJ. Late yesterday or midday yesterday, it was Visa. Oliver, is this just the new norm, that we're going to have to get used to waking up every morning, whether you're in the U.S. or now Europe, and see this type of thing?
Listen, it's been a very active time for antitrust matters at the DOJ, yes, but also at the FTC. But it's also partially a political decision, right? In the so far as it's been a priority for the Biden administration and the Attorney General under him to try to bring back some competitiveness into the American economy. That has been very squarely what he has said. So yesterday we had this move against Visa, saying that basically they have a web of exclusionary activity in the debit card market. We should say for context that Visa holds about 70% of all the debit cards within the United States. But it's not just been Visa, right? We've had Google a couple weeks ago. We've had Apple. We've had Meta. We've had Amazon. We've had blocked mergers in grocery stores. We've had it over in retail. We've had it in concert tickets. So we have it all sort of ramping up now. Particularly, you know, it's not a coincidence that we have a president leaving the White House now, trying to get that agenda through.
Yeah, the one I still will never understand is aspirational luxury, trying to block a deal there. Anyway, Oliver, I know those still working their way through the court system. Thank you so much for helping us cover it. That is Manus more than me. Manus wants that aspirational luxury goods. All right, Oliver Crook, thank you very much. We appreciate your reporting. Again, the latest coming from the DOJ. All right, coming up, Israel intercepts a missile heading towards Tel Aviv. Hezbollah says it was fired at Mossad headquarters. We're going to have the details for you next and the rest of your front pages.
Top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers. And when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody. And that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's get you some front page news, a look at what's making headlines around the world. First, Hezbollah says that it fired a ballistic missile targeting the Mossad headquarters near Tel Aviv. Israel did shoot that missile down. Hundreds have died in Lebanon as fighting between the two sides continues to escalate after last week's pager attacks.
Front page of The Guardian. Israeli strikes on Lebanon continue as Iran says Hezbollah cannot stand alone. Iran's president challenged the West and said Israel's attacks on Lebanon cannot go unanswered. He also said Iran was ready to engage in a nuclear deal.
And on the Bloomberg, China cuts its one-year policy rate by the most ever in a stimulus drive. And not to be outdone by the Federal Reserve, China's central bank just cut its key rate by 30 basis points. That's the biggest cut the PBOC has to. Let's get into this. Let's bring in Bloomberg's Jill Desis. Jill, we've been waiting for the bazooka. We had some details yesterday of more stimulus. So put it all in context for us.
Sure, Danny. I think there's a few things to read into, first of all, this big cut today. So this is the medium-term lending facility rate. I do want to caution, I know that, the big size and scope there is that this is a 30 basis point cut, most on record. I do think that that indicates that the PBOC is thinking about what it means to actually put, the pedal to the metal here and actually implement some of this this new stimulus that it's been announcing. But I will also caution that the central bank has been moving away from the importance of that rate in particular is a key rate. The one to really focus on instead, I think, is the 7-day repo rate. This is a shorter term policy rate that the PBOC has been working over the last few months to really kind of pivot to making its key rate. Now, during this big press conference that we had, just on Tuesday, where the PBOC governor, Pan Gongsheng, came out and announced a bunch of stimulus in China, he actually said that they plan on cutting that rate sometime in the near future, probably after this big Golden Week holiday that they're going to have next week. We'll actually start to see some cuts to that rate. But really, Danny, I think what all of this is telling you in context is that the central bank, at least in China, is really seeing the importance of implementing a lot of stimulus. They're firing on all cylinders here. They're cutting a bunch of different rates as they kind of move toward implementing some stimulus to actually help the economy here.
Well, Jill, yesterday, by the way, the yuan is reacting. It's voicing some strength, breaking through 7. Yesterday, you and I caught up, and you said to me, Manus, this is more about not just the monetary policy, but the fiscal policy. Briefly, is that the next big shoe to drop?
Yeah, that's right, Manus. I think that's really what we're all waiting on here, right? Because sure, the central bank is doing a lot for its part, but is there going to be any fiscal stimulus? I mean, we talk a lot about how one of the big problems with the Chinese economy right now is that consumers aren't actually spending money. I mean, how much are, lowering rates actually going to help? We'll have to see if there's additional fiscal stimulus that actually comes in. Nothing here yet, but we'll have to see.
It's about stoking the credit side, the demand side, I should say, for credit. Jill, thank you very much. You can throw out all the money in the world, but you need the demand side to work. Jill Desis in Hong Kong. This is Bloomberg. Good morning from New York.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our European headquarters in London, welcome to Bloomberg Brief. I'm Danny Berger alongside Manish Cranny in New York. Let's set your agenda.
It's another all-time high. Stocks and gold break records. Two-year yield drops to the lowest in 2 years. This as the bets on a consecutive jumbo rate cut land. Threat and cooperation. Iranian president delivers dual messages at the UN as tensions in the Middle East ramp higher. And another DOJ probe. U.S. officials investigate German software firm SAP for potential price fixing. Danny, good morning. Back to jumbo debate rate cuts.
Yeah, back to jumbo pricing. We had our 41st record high this year in the S&P 500 will today be 42 for now. S&P 500 futures down 0.2%. One of the best statistics. Jim Reed at Deutsche Bank this morning. Now the S&P 500 is up 20% year to date. If we can do that this year, it will be the first back-to-back 20% plus finishes since the late 90s. U.S. two-year yields, they continue to decline ever so slightly, less than 1 basis point. We are still at the lowest since 2022. Was that consumer confidence, that survey coming in quite weak, reinvigorating the 50 basis point rate cut hopes. Meanwhile, euro versus the dollar, little change this morning. The euro has been surprisingly resilient given the weak data we've had coming out of the region. But Manis, it all just comes back to the dollar side. Weakening of the dollar on expectations that we will get indeed another jumbo cut.
Yeah, and we're down to 50-50 again on that at either of these last two meetings. And that's 6,000 level on the S&P 500. I mean, there's a whole club of people up there now. If it's not BMO, Evercore, Julian Emmanuel, but Stuart Kaiser, I love what he said yesterday. The Uber bull case is here. We've just sat and chatted with Max Kettner. I have never seen somebody as bullish all the way around across risk assets.
I have to say the message I almost got from Max was good news is good news and bad news is good news, because we're in an environment where he was saying that the Fed's going to be cutting 25 basis points no matter what. I found it really interesting that Austin Goolsbee yesterday saying that anecdotal data is really important here. So when you get stuff like consumer confidence, even though consumers are spending, the Fed's paying attention to it, Manis.
Yeah, I mean, a number of people have said, look, stop focusing on those consumer numbers. A, they were done before the rate cut, and B, until the consumer stops spending, there's no need to worry. And then if you take the corollary to that with Max is you may get a little bit stickier inflation. That may cause the Fed to have to pause. But you do not want to blink on being long risk until that moment arrives, Danny.
Yep, that's right. 41st all-time high. Who expected us to be here?
So long as that's reflected in my pension sheet at the end of the year. We've got to talk about geopolitics because it is front and center. It's UNGA week here in New York. And again, we're focusing on what's happening between Lebanon and Israel. Hezbollah has fired a missile aimed at Mossad's headquarters near Tel Aviv. Now, it's the group's first time aiming at the city. Israel shot it down. Iran's president went on to speak at the UN yesterday and called on the international community to intervene.
We condemn Israeli crimes against humanity. It is imperative that the international community should immediately stop the violence and bring about a permanent ceasefire in Gaza and bring an end to the desperate barbarism of Israel in Lebanon before it engulfs the region and the world.
Mark Champion joins us now. Mark, listening to the president there, people, suggest he is a more moderate version on the political side relative to perhaps the military arm within Iran. His message to the UN yesterday was double-sided, really, wasn't it? On one side, talking about potentially starting a new nuclear deal, which sounds very, very strange, and calling on the international community to step in here. Your take?
Yeah, I mean, so we remember that he was elected as a bit of a surprise, really. Iranians turned out to vote who, weren't turning out to vote, hadn't in the first round, because of the message that he had, which was, we're gonna, if I'm elected, we're gonna try and get the nuclear deal revived, relief on sanctions, and relief for Iranians and a very battered economy. So that's something that he wants, something the regime wants, and that will all happen before October 7th. So in the meantime, you have the October attacks, and that has changed really the whole environment. And you can imagine that it's going to be an incredibly difficult prospect to try and get any kind of agreement for sanctions relief at a time when the U.S. sees Iran as involved in attacking Israel, or if there is a wider war between Israel and Iran, with the U.S. inevitably taking part. So a very tough message for him to sort of deliver. And I think one has to sort of pay more attention to what is it that Iran is going to do now with regard to Lebanon, rather than the nuclear deal, because that's really unlikely to materialize anytime soon.
Mark, also at the UN General Assembly, Zelensky will be speaking at 9 a.m. this morning in New York. How do we understand the wider Assembly's appetite to support Ukraine in its war with Russia?
Well, I think it will be divided as it has been. You've basically had the U.S. and its NATO allies, which have been very strong in support of Ukraine. There's lots of debate about just, what weapons should be delivered and how, what restrictions there should be. But overall, the picture has been a very strong support. And that is not shared by much of the rest of the world, which will pay, as Brazil's Lula da Silva did yesterday, pay lip service to the idea that, we don't like the invasion. But at the same time, we'll say, but we should end the war, stop supplying, Ukraine with weapons, and basically, let it end on Russia's terms. So I think you'll have, a divided, again, UN Assembly. And again, where the real interest will be is what exactly does he now unfold as his view of how to bring this war to a close, because that is what he's gone to Washington to do.
Mark, we really appreciate it. Mark Champion of Bloomberg Opinion. Now, in the U.S., we are about 40 days away from the election. Pew Research puts foreign policy as one of the top 5 issues for voters. Former President Donald Trump and Vice President Kamala Harris have spoken about Ukraine, Gaza, from NATO on the campaign trail. For more, let's bring in Bloomberg's Bobby Ghosh, who joins us now. Bobby, even though they have talked about foreign policy, we know what's been dominating a lot of the context. It's been the economy, it's been immigration, it's been things like abortion. To what degree does foreign policy move the needle in American politics in today's day and age?
Well, Danny, historically, it has not moved. Foreign policy has been something that has not really moved any kind of needle in domestic politics. The old shibboleth is that foreign policy ends at the water's edge and American voters don't really care. But the fact that you quote that Pew poll saying it's among the top 5 issues, that reflects a change of attitude in American politics. And you're seeing a little of that being reflected in the way the two candidates communicate their policies. They are, at least Donald Trump is, setting out a foreign policy agenda. The Vice President Harris is associated with the foreign policy agenda of the sitting president, who is known as the foreign policy president. So for the first time in my adult lifetime, it seems that Americans seem to care a little more about what's going on in other parts of the world than they have done previously.
You would also say that demographics play into this. We saw the protests on campuses over the Hamas-Israel conflict. The demographics have shifted, and it's very different, perhaps, to our parents or indeed to our demographic as well. These politics matter an awful lot more. Foreign policy matters a lot more.
Speak for yourself, Manus. But yes, you're right. Young people care much more about a few things. Climate. And they seem to recognize that climate policy is connected to foreign policy. And recently, we've seen that they care quite a lot about what's going on in the Middle East in a way that we hadn't seen before. Not just in the campus protests, but also in protests around the country. Even now, we're seeing every now and again, I walk out into the streets of New York and I see a Palestinian flag or somebody wearing a Palestinian keffiyeh. These are expressions, and they're almost always young people. These are expressions of interest in foreign policy. And this comes at a time when the conflict in the Middle East seems to be coming to a kind of crescendo. And my sense is that if there is an open war between Israel and Hezbollah, and Israel and Lebanon, we'll see another burst of protest in the streets of the United States.
I just wonder, Bobby, how much it moves the needle, because when Biden was still the candidate, there'd been a lot of talk about double haters, people who didn't want to vote or protest non-votes because of concern over Israel and the Biden administration's support for it. If it is confined to this demographic, do we understand how consequential it could be to the election, whether this type of demographic is enough that Kamala Harris might lose, and especially in places like swing states?
Well, we all expect that the election will be decided by very, very small margins. And even now, at this late date, 40 days away from the actual vote, the margins in the polling is very, very small within the error margins. And so it could matter quite a lot how young people vote and whether they turn out to vote at all. And whether they vote or don't turn out to vote could have a major impact. They're having to choose between two candidates, neither whom really speaks to their concerns. On the one hand, you have Donald Trump, whose whole attitude towards the wider world is one of suspicion and hostility, his whole idea of foreigners in the main is that foreigners are trying to cheat us, they're trying to do us wrong in one way or the other. They're trying to come into this country illegally, or they're trying to cheat the American economy by selling us cheap goods, and we're trying to stop that by increasing tariffs. And then you have Kamala Harris, who has not really fully articulated a foreign policy, a view of the world, but she's strongly associated with the policies of the administration that she represents, which is Joe Biden's administration. And there, for young people, that administration has not really exerted American influence in the world. In fact, what we've seen over nearly a year now in the Middle East is that the United States seems unable or unwilling to move the needle. You have America's closest ally in the region, Israel, making more and more warlike moves in the region. And despite Biden saying over and over again that this shouldn't happen, it is happening. So if you're a young American, you're looking at these two candidates, it's not terribly reassuring.
Okay, so the takeaway there is that Harris maybe has more work to do. Trump works on sound bites and plays through to his base. Let's just reflect on what he had to say about NATO at the start of the year, in February. Let's take a listen.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
That's transactionalism, whereas the Biden-Harris ticket is more about global geopolitics. That voice plays to the MAGA base. But where is it that Harris is missing? What is she missing to rise to match that kind of soundbite?
She has not explained why the United States should be engaged in the world. I think she takes it for granted that the audience or the larger electorate will understand that, and that good sense will prevail. But at a moment when the American view of its place in the world is being assaulted in that way by Donald Trump, I think it's important for Kamala Harris to step up and say, to reassure American voters that the United States has an influence in the world, still the main protector of freedoms in the world, and that foreigners are not just trying to cheat us or not just being delinquent, and to explain why the United States should remain engaged in the West and in the wider world. That message has to come from the Kamala Harris campaign. It hasn't yet. There's some time yet.
Well, it certainly matters in Pennsylvania. 2020, Joe Biden took about 1.2%. It's the second largest Ukrainian population in the United States of America. So it's going to bear down there. Bobby, thank you so much for giving us the detail there as we run up to this election. Bobby Ghosh on foreign policy in this election. Coming up, another election issue. We're watching renewables. We'll bring you our exclusive interview with Miguel Stillwell de Andrade, CEO of utilities firm EDP. That's next on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Brief, I'm Manus Craney alongside Danny Berger. Well, the Fed's jumbo rate cut, it's giving utilities the boost. We've seen that in the stock markets, but it's also according to the wind farm and solar energy project developer EDP. I sat down with the CEO, Miguel Stillwell de Andrade. This is what he had to say about the outlook.
Our business deals well with either stable or decreasing interest rates. I think where it's obviously much more disruptive is when you have a very sharp dislocation up in interest rates, because if you're investing at a particular cost of capital and suddenly that goes up significantly, well, if you've been pricing off that lower rate, then obviously you're going to get squeezed on that. But either stable or decreasing, I mean, that's a much more ideal environment for us.
3 days after we last sat down, which was in March time, Donald Trump came out and said on day one, he will stop offshore wind. Of course, there's a distance between what politicians say they will do and what they will actually do. What would be the worst case scenario if that kind of policy was enacted for you?
First, I think the important thing to note is that onshore wind and solar, which is our primary business, I think there's a consensus that that will continue to be developed and built out over the next couple of years. You know, we've been in the US since 2007. We have almost 10 gigawatts already operational. So this is something that has withstood various different administrations. Yeah. I think in relation to offshore, which is a much up-and-coming business, I mean, it's a much newer business, there's only one federal license. And so for the offshore business, it is really dependent on the administration to get that one federal license. The rest is very much up to the states. So in relation to our projects, we have one which is more mature up in Massachusetts. We have line of sight to get that federal license still within this year. And so we have a PPA that has been awarded to us And so I think, whatever the circumstances, we feel pretty good about that project. In relation to the overall industry, I mean, obviously, if there is that decision day one, I mean, it's not good for the development of the industry, but we'll see what happens.
And yet, at the same time, you have Harris embracing oil and gas. She's pivoted on fracking in Pennsylvania. Through the prism of the investors that you're talking to here, how do they view Harris for your world?
It's much more continuity versus the previous administration, or the current Biden administration. So I don't think that people expect big surprises in relation to the Inflation Reduction Act, in terms of the regulation which has to be implemented. The one thing which I would say which is important both for the Harris administration and the Trump administration is to really be able to accelerate everything relating to permitting and licensing. And that's true for renewables, that's true for almost energy projects. I think one of the big things that is holding up the industry and the build out of this infrastructure is still that administrative burden, projects that take a very long time to be developed. So that's really what we've been focused on, is how to accelerate that. And, some of the bipartisan discussions that have been had are applicable both to renewables and to the gas, for example.
Are you optimistic that whoever comes to power, that process of permitting, because this is what they're talking about in housing, they're talking about in energy, are you optimistic, regardless of who comes into power, that can accelerate?
It has to. I think this is a question of managing to build out that infrastructure, and that is an extremely important thing. So dedicating the necessary resources, doing things like digitalizing these processes, standardizing them, really making sure that people are focused on getting these things past the finishing line. That's super important to be able to get. Otherwise, you're going to have much more demand than supply, and that never leads to a good result.
I'm just curious, look, the US is obviously an important business for you, critically important business for you. What's your appetite to do? Because when we caught up before, you said, man, it's not really about doing deals, it's about consolidating. Has that moved forward as rate cuts arrived and as this market improves? Are you hungrier to do more deals now than you were 6 months ago when we talked?
We view the US as a very attractive market. About 40% of our overall investment worldwide goes into the US. So we're investing 17 billion euros over these 3 years, of which 40% is going to the US. And so this is certainly a very attractive market, and we want to continue to grow, whether it's through organic growth, wind and solar. Batteries is extremely important. I would never rule out acquisitions, but I think the big focus is really on our organic pipeline.
EDP CEO there sitting down with us. Danny, here in New York when you were in London. Just to put it in context, this is one of the top 5 players, Danny, in the renewables business globally. Here in the United States of America. And when you listen to that conversation, it goes back to the same conversation that you and I had last Friday, which is about permits. This is about taking away red tape within housing, within renewables, and within the energy sector.
And it's just really important, considering that the time that we're in, that there's this demand for energy, for AI, which I know you talked about data centers, that is unprecedented. There's not enough money in the world. The OpenAI chief, Sam Altman, according to people familiar, had met with the White House, met with Biden yesterday, basically saying, we need data centers, and the energy that we need to power these are the equivalent of what you need for small cities. It is an insatiable demand at the moment, Manus.
And add into that the targets that many of the huge hyperscalers have set in terms of renewables and being CO2 neutral by 2030, etc. And that adds in a multitude, a magnificent new layer of demand in renewables, Danny.
Yeah, if you're Microsoft, just buy yourself a few nuclear reactors. How about that? Okay, coming up, we're going to get you set up for your trading day here on your Bloomberg Brief.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's get you set up for your trading day on this Wednesday. U.S. new home sales, those will come out at 10 a.m. Eastern. Then we get a few more bits of Fed speak. We're going to hear from Fed Governor Adriana Kugler. That's at 4 p.m. Then candidates Harris and Trump. They will both be speaking on their economic visions in Pennsylvania and North Carolina, respectively. Manus, how you stocks doing?
Well, we're taking a wee breather from the 41st at record high. Some individual names that are on the move, Danny. KB Homes reporting weaker than expected quarterly earnings and softer gross margins. Tesla down over 1%. Price target and delivery estimates actually have been raised at Piper Sandler, seeing the best quarter ever in China. Despite that, we're down 1%. Market is lower. Broadcom down 1.2%. Japan FTC plans to inspect VMware parent Broadcom to investigate whether it led the unfair practices. There you go, Danny. More investigations. As you say, this is about a DOJ that is far from done with perhaps getting involved in some of these big names.
Yeah, it does. And look, it impacts risk sentiment at a time when there's no shortage of it. A 41st record high today so far. Doesn't seem to be on track for it. That's it for us. Surveillance, that's up ahead.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever. S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index, and you're going to be okay.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is a lot to like. I mean, this basically all comes down to the resiliency of the economy.
We expect the U.S. economy to continue to expand, to continue to grow its solid momentum.
Eventually, we do think that an economic contraction plays out.
Overall, the economy is performing like it doesn't really get impacted by kind of these swings in rates.
I think the bond market rally and the equity market need to happen in tandem, and they need to make sense rationally for what's going on in the economy.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading day started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now with your equity market on the S&P 500. Slightly negative, we're down 0.1%. This has been a grind. Just about squeezing out the 41st all-time high of the year so far on the S&P 500. You can thank NVIDIA. You can't thank the data. Consumer confidence falling by the most in 3 years. The share of people saying jobs were plentiful declining for a 7th month. The share of people saying jobs were hard to get, the highest since 2021. The difference between the two, Lisa, continues to narrow.
A lot of people focusing on this is potentially a forward-looking sign of just how weak the labor market actually is. Andrew Hollenhorst coming out pretty much on cue from Citigroup talking about this. My question is, we're getting so many mixed signals. The way that the market read this was, baby, this gives it an opening for a 50 basis point rate cut in November. Good for risk. I mean, this sort of is where we have been for quite a while.
When it comes to the survey, now you see consumers really worried about the labor market. That metric you're talking about, closely watched by economists. It's the longest streak that we've seen this narrowing since the Great Recession. So there's a lot of concern about this exact metric. But then you look at some of the details, and you see consumers are also still worried about inflation, but they're still spending, especially on services, the part of the economy that has obviously been hard to tail back.
As AMH really laid out for you, this is consistent typically with recession-type conditions, but then you hear from Dana Peterson of the Conference Board, who said the deterioration across the index's main components likely reflects consumer concerns about the labor market and reactions to fewer hours, slower payroll increases, fewer job openings, even if the labor market remains quite healthy. That word healthy still getting knocked around.
But we've heard that from everybody. I mean, we heard that from pretty much anyone who watches the labor market. This doesn't look like some sort of massive downturn, like you're on the brink of some sort of significant recession. So what does the Fed do with this? And at what point do further rate cuts of a 50 basis point like end up igniting, I don't want to say inflation, but something kind of like that?
Do you want to talk about inflation?
Well, I don't know that it's actually a preeminent concern, but there is a feeling that we do not know where it's going to stick. And there is a feeling in markets that there is anxiety that maybe we have overlooked that. Mickey Bowman kind of underscoring that, saying inflation's still very much a concern, and maybe giving some life to this steepening in the yield curve, gold at a new all-time high, some of the other types of moves like that.
Or it's politics. And Paul Donovan talked about this yesterday in his note ahead of the survey, saying how when it came to the Michigan sentiment, that was entirely due to Democrats' optimism. Democrats might be uniquely living in a better economy. More likely it represents political polling. A lot of criticism of these surveys is that it depends what side of the aisle you sit on.
We see this in UMich all the time. Things are super polarized in this company. On the inflation point, gold's at an all-time high. The curve has been steeper, much steeper over the past week. We started to see some action in the likes of Rio yesterday. Rio Tinto having a nice rally. Caterpillar having a nice rally off the back of rate cuts in China. Dollar China, the offshore yuan, dropping below 7 for the first time in 16 months. Another rate cut out of China overnight.
obviously a sign that there is an attempt to stimulate an economy. What this is and how you describe it, very much contentious depending on who you are. Some people saying this is a bazooka. China Beige Books, Shahzad Kazi came coming out and saying, in no way is this a bazooka of any kind, saying more likely this is actually a recognition, an official recognition by authorities that this truly is a weak economy and that Q3 or GDP probably is going to come in somewhat weak, and acknowledge that in real time.
That's why a lot of people expect a lot more out of Chinese authorities in the months ahead. Your equity market on the S&P 500 as we speak, just recovering just a little bit. We're still down by about 0.1%. In the bond market, yields across the curve, particularly the front end of the curve yesterday, lower. Today, a little bit higher, up 2 basis points, Lisa. The 10-year, 3.75.
We do have a bunch of auctions coming up. To me, this question of how far can the Fed cut, and will they respond to some of the data that we've seen, including that differential in the labor market that you were talking about, John, is really interesting. The fact that you have more than a 50% chance of a 50 basis point rate cut in November when a lot is yet to be determined is fascinating to me and shows how you give them 50, they want another 50. It's sort of like parenting.
Don't you think what separates the bulls and bears right now is just jobless claims? And a lot of people who think that maybe you shouldn't be long risk are looking for the labour market to deteriorate. Andrew Hoddenhorst City. The people who think you should be long risk think the labour market's going to hold up. Jobless claims are south of 220. It all seems to come down to one data point, which makes me wonder how vulnerable we are. The conversation we'll have in just a moment is whether we're vulnerable to another August 5th taking place in this equity market.
That the next non-farm payrolls is going to end up being incredibly volatile and a moment, a catalyzing moment for markets between the bulls and the bears. This is going to be the determining non-farm payrolls report until
everything
it comes
gets
out.
Settled.
Until it comes out, and it's, 142.
Wait for the next one.
And then wait for the next one. It's going to decide everything, and that's basically the cycle we've been in.
That's been the last 2 months or so. Coming up on this program, Dean Kerner, the macro risk advisors, on the risk of another August 5th. OECD chief economist Alvaro Pereira on why the U.S. economy can avoid recession, and former senior U.S. intelligence official Norman Rule as Hezbollah targets Tel Aviv. We begin the hour with stocks just off all-time highs, thanks to another boost from NVIDIA. Recent gains masking some vulnerability in the U.S. economy as consumer confidence fell by the most in 3 years in September. Joining us around the table, Dean Kerner, the macro risk advisors. Dean, good morning to you, sir.
Morning.
You've written about it in your note. Let's talk about it. The risk of another August 5th. How big is that risk?
Well, these are always tail type events, but we just saw one. And I think, what I try to do is learn from what the market tells us. And that was just, quite an asymmetry. And I think gapping out of prices is something that we see time and time again in markets, even liquid markets. And, I tend to really live and breathe these anniversaries of events that are volatile and so forth. And 10 years ago in October, the Treasury market had this famous thing called the up crash. It was sort of the inverse of the flash crash, right? And so in the most liquid, most consequential market for assets, the U.S. Treasury market, you're not supposed to have prices gap out, even if they gap up. So that was 10 years ago. U.S. debt outstanding was $17 trillion. It's $34 trillion now. So, it took us 220 years to get $17 trillion of debt and 10 more to get the next $17 trillion. I think that means something. I don't think you can look at the Treasury market as a stabilizer as you once did. It itself is sort of part of the risk dynamic of the market.
It's a source of risk.
It can be. Now, certainly, as you guys were outlining, the Fed is kind of coming to the rescue. Your WIRP page on Bloomberg, I can't imagine how many times that's being summoned. As Anne-Marie said, you've got 1.5, Fed eases priced into November. It's going to be a very interesting meeting. It's going to come 2 days after the election. If Trump wins, I'm sure all these consumer confidence numbers will flip.
For the Republicans, anyway.
Exactly.
Yeah.
So we'll sort of get, it'll be a great economy all of a sudden. Look, when I step back and I just look at the sources of vulnerability, I do think August 5th is consequential because a 3% down move in the S&P doesn't happen all that much, but a 65% up move in the VIX on the back of that should tell us something about the fabric of risk-taking. And, you've talked a lot about the economy. Ultimately, asset prices in the economy, they're going to sync up over the long term, right? But look at China, right? We obviously have a very weak economy, but they goosed asset prices quite a bit. Look at BABA and JD. I mean, just gigantic amounts of call buying yesterday, huge rally in ETFs like the FXI. And so over short periods of time, at least for me, the financial economy matters quite a bit. Positioning matters quite a bit. And I just try to take what asset prices tell us, and I look at things like gold. To me, gold as it occupies a very important place in the portfolio right now. It's scarce. It's in demand by central banks. And it's got this, what I would just call anti-correlation aspect or characteristic to it, which is on the worst days for the S&P, gold hangs in there. That's a very important property to have in your portfolio right now.
Before we get into gold, there's a lot that I want to unpack,
Yep.
in particular about the fabric of risk and how bonds are very much a part of that in a new way. They don't act as the same kind of stabilizers. Is there any way to quantify how much and how new this is, that risk lies with bonds as much, or maybe, even sometimes more than in the equity space?
Let's first recognize that I think in a true pinch, bonds will take on their risk-off characteristic. In other words, if you got a absolutely systemic shock where the S&P was down 25%, I think bonds are going to rally. But in the non-truly systemic event, you've got a couple things that are problematic for bonds. The first is, and I think we're largely past this, is 2022, the rate hiking cycle, right? We had to do something about inflation. They were behind. They had to go fast. You had this joint drawdown in stocks and bonds. And the second, as I was alluding to with John, is just the sheer size of the supply and the debt outstanding. And sadly, no business plan, right? I mean, if the U.S. government is a company and you've got this debt outstanding, you'd really hope that the politicians would be talking a little bit more sensibly. You guys ran a story yesterday about some of the stuff Trump is throwing out there. I think it's, just with letting the tax cuts continue to go, and then no taxes on tips and so forth, no taxes on Social Security, you've got another $11 trillion. Now, he's throwing a lot of stuff out there, as is Harris, but there doesn't seem to be an adult in the room with respect to this just incredibly consequential asset class.
To take that a little bit further, are you saying that heading into November, the big risk potentially for markets is a wake-up call almost about this? Because we've been hearing a lot about the deficit, and it hasn't really mattered. I'm not going to use Liz Truss's name, but there is this fear that maybe you do have some sort of reaction in the bond market in a real way on the heels of the election.
Right. So the U.S. is still the global reserve currency. It's not going away. That's not the U.K. So the Truss moment was a big deal. I think we should look at it and certainly at least try to learn from it. I don't think it's that, but I do think that the buyer base of the U.S. Treasury market has evolved quite a bit over the last, decade or so. The fundamental owner is not necessarily the Chinese central bank anymore. Those holdings are down 40-odd%. You've got basis traders, folks trading this arbitrage between cash and futures. I don't think you want to lean on relative value hedge fund traders as the key chief component of the demand at your auctions. So it does worry me. Inflation is coming down. The cost of debt is coming down. But these interest costs are punishing. And it's just hard to me to imagine a scenario in which we grow our way out. Maybe there's some gigantic peace dividend coming from AI, but I certainly just can't help but look at, I'm a deficit scold, as Paul Krugman used to say. I'm worried. I just think it's something we have to pay close attention to.
Dean, where do you think the volatility will come around the election? Everyone, is nervous ahead of it and don't know how to potentially trade this. But after, especially when you have places like Georgia saying they need to hand count every single ballot, it may be days or weeks until we know who wins this election.
Yeah, it's so interesting to look at the Chicago Board Options Exchange in their voracious appetite to make more money have given us more options listings. And so you have options on the S&P that expire November 5th, Election Day, and November 6th. Such granularity that you can look at the differential in prices. And so we look at this metric called implied volatility. It basically allows us to score the price. And the difference between November 5th expiry and November 6th expiry effectively implies that the S&P could move 2.5% or more on November 6th, the day after. Now, I think there's a couple ways to look at it. One, if you go back to 2016, you'll remember when Trump was ahead and it was coming to everybody's recognition that he was going to win, the S&P was down 4 or 5% overnight and then rallied strongly the next day. So people kind of came around to, wow, this guy's going to cut taxes, the chaos. It might be good for markets, right? When I look at the differential in prices now, my conclusion really is a learning experience from episodes like Brexit. And John will remember quite well, liquidity just dries up. No one wants to be short volatility, this convex insurance contract, downside puts as an example, ahead of something that you just can't price. You know, the setup, I think kind of on both sides, is to call foul on this thing. It's not a good thing. And so when you pull back liquidity from a market, the clearing price goes up. There's going to be less supply of insurance, of options to the marketplace, and that's going to drive up the price. And I just think that's another thing we're supposed to worry about in this kind of theme of the gapping out of prices.
I want to put a bow on this. You're really questioning the risk mitigation characteristics of treasuries going into the election. Are you saying that for the people coming on this program right now pitching 60-40, we should be pitching something else?
Well, I think we should be really looking at gold. You know, gold is this trending asset. It doesn't have the same consistent correlation characteristics to treasuries. Again, in a true risk-off, a big one, I do think treasuries are going to rally. Where else are you going to go?
Sure.
But I do think that the supply is an overriding issue, especially for the back end, right? The front end, yeah, that's coming down. Now, in some ways, the market's already there, right? We've already priced out sort of 8 more cuts out to the end of 2025. But the back end, the 10-year, the 30-year, I think these supply dynamics are going to be a headwind for the traditional risk-on, risk-off, the shock-bearing characteristic of treasuries.
Gold at all-time highs. Dean, deeply thoughtful, as always. It's good to see you, sir. Dean Kerner there at Macro Risk Advisors. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Hakes. Hey, Yahara.
Hi, John. UniCredit CEO Andrea Orcel says he won't seek a board seat at Commerce Bank. The Italian bank has built a major stake in the German lender, saying a full takeover is an option, even as the German government strongly opposes the move. Amid the intense battle for the future of Commerce Bank, the lender has appointed a new CEO. Bettina Orlop will take over, leading the 154-year-old company through one of its biggest challenges. Sam Bankman-Fried's ex-girlfriend and co-conspirator in the FTX fraud, Caroline Ellison, has been sentenced to 2 years in prison. The judge saying Ellison's help in the conviction of Bankman-Fried was remarkable and praised her testimony, but noted the case was one of the most serious financial frauds ever committed and that her cooperation can't be a get-out-of-jail-free card. Like Bankman-Fried, Ellison was ordered to forfeit $11 billion as proceeds of the crime. And the Trump campaign says it's been briefed on, quote, real and specific threats by Iran to assassinate the former president. A campaign spokesman says a representative from the Director of National Intelligence told Trump about the plot. But there's no indication Iran's efforts are linked to the 2 recent attempts on the former president's life. Ryan Ruth, the suspect in this month's incident at Trump's Florida golf course, was charged yesterday with attempted assassination of a major presidential candidate. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, taking America first to new heights.
We will set up special zones of federal land with ultra-low taxes and regulations for American producers. These will be ideal spots for relocating entire industries that we've taken in from other countries.
That conversation up next. Bloomberg's Undercurrent just around the corner. Live from New York City this morning. Good morning.
On the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Equities closing at all-time highs just about in yesterday's session. This morning pulling back by not even 0.1%. In the bond market, yields resume their climb, up by 2 basis points on a 10-year 3.75. In the commodity market, check out gold. 4-day winning streak through yesterday, all-time highs, pulling back just a touch, just about unchanged on the session. Dean Kernett of Macro Risk Advisors on the program just moments ago. If you're worried about risk into the election, maybe Treasuries won't provide you with those risk mitigation characteristics. Perhaps you should look elsewhere.
And he's talking in specific about gold. Yes, really, gold. There is a question here about going forward, whether this is the new uncorrelated asset class, especially with central banks buying and potentially, I don't want to say concerns about inflation. Whiffs of inflation was something that you used this morning, but a sense that maybe it's going to be stickier than people think.
Look, we're going to talk about it more throughout this morning. It's a trend of the past week. Whether it continues, I don't know, but I think we have to identify the current trend. It's gold. It's things tied to China. Base metals, we saw it with copper yesterday. You saw it with the miners, Rio. You saw it with the tech firms, Baba. And things starting to turn in China. I've got no idea. I'm just looking at the trend of the last week and trying to work out if it continues.
And if you think about it, China's been exporting deflation. If they start to actually grow, then could you get a different kind of story? Not necessarily inflation, but a stabilizing in that deflationary force.
Gold just off record highs. Under surveillance this morning, taking America first to new heights.
The centerpiece of my plan is for a manufacturing renaissance, which will be a 15% made in America tax rate. And we will set up special zones of federal land with ultra low taxes and regulations for American producers. These will be ideal spots for relocating entire industries that we've taken in from other countries. They're going to come in at levels that nobody's ever seen before.
So here's the latest this morning. Donald Trump pledging to recruit foreign companies to move their manufacturing operations to the United States using tax incentives and the threat of tariffs. Kamala Harris will outline her views on the economy in Pennsylvania later on today. Joining us now from the nation's capital, Bloomberg's Enda Curran in Washington, D.C. Enda, how different is what Trump is proposing from what we already have?
Well, it's very punchy, and as you say, John, it does take it to another level. On the one hand, former President Trump talking about bringing corporate taxes down to 15% and saying if you don't make your goods in the US, you will be facing tariffs. Now, that is a new dimension to where the trade story has been developing in recent years. Former President making the point he thinks thousands of businesses will move here and trillions of dollars worth of wealth will be accrued in the US as a result. But the economists watching this yesterday when I spoke to them made the point that on paper that would prod more production to come to the US, but the flip side is that it could also stoke another round of protectionism as trading partners retaliate, and there could also be an inflationary aspect to it as well. So it's kind of double-edged sword, and don't forget, of course, it depends on the balance of power in Congress and whether or not President Trump could get the corporate tax rate cut through, because that's obviously a big part of this equation that he's offering.
Yeah, that's the carrot. He also talked about appointing a manufacturing ambassador who the sole task would be to go around the world and basically try to steal other countries' industries. What industries is he going after, Enda?
Well, again, we'd have to see the exact details and mechanics of this. Already, some industries in the US are fairly well protected. There are tariffs on industries. The auto industry, for example, already has a lot of its production based here. So the details of this would remain to be seen. We'd have to see how China would be treated in this as well, of course. But I think the broad picture is, yes, it adds to the idea that the US, again, will be putting a focus on rejuvenating manufacturing here. That's been a theme in the Biden administration, as you know, through the subsidies and grants for green energy in the chip space. President Trump as well, when he was president, was promoting manufacturing here, and this would now appear to be taken to a new level. The issue, though, is when you speak to both business people and economists watching this, On paper, that sounds okay, but the big question becomes, how do key trading partners retaliate, and how will that impact American businesses trying to do business around the rest of the world too? So, as I say, very much a double-edged sword, and a lot remains to be seen in the detail of how this will play out.
We're still waiting for a lot of details from both sides of the aisle. We're going to hear from Kamala Harris today. I imagine she's going to talk about a, quote, opportunity economy. She continuously talks about this idea. But what is that? What do you expect her to say today in Pittsburgh?
Certainly a lot of anticipation for more detail on Vice President Harris's economic policies. Today, the speech that Vice President will detail will, on the one hand, speak about the need to protect workers' wages and benefits, but on the other hand, also make clear that the Vice President is willing to talk and do business with big company leadership. She's making it clear she's willing to get the balance right between labour and capital. The theme of this speech, again, will be around incentives, pragmatic incentives for manufacturing. Of course, the speech will be delivered in Pittsburgh. That's obviously very symbolic. And of course, we're told, my colleagues have reported that the Vice President is planning a lengthy document on her economic policies as well. I think a lot of people will be waiting keenly to see what's in that. We have had detail, of course, so far on child tax credits, on the measures, what's described against price gouging, measures to promote house building, for example. But there's still, I think, a view out there that more detail is needed on the Vice President's economic policy, and today might be the first step in getting some of that.
We'd love some more detail. Enda, appreciate the update. Thank you, sir. Enda Curran, down in Washington, D.C. Potentially some more detail a little bit later.
Yeah, the question I have, and this has been something that's been true for both candidates, is what will the market cling on to? And I'm talking about companies as well, C-suites, that are not necessarily taking action. That's where the lack of clarity is, not just on what the plans are, but what's feasible, what's actually going to get through, because a lot of this is expected to get left on the cutting floor.
Do these campaign promises translate into legislative reality? And
if they do, what's the bigger risk, the deficit or potentially the growth profile?
Up next on this programme, a man tasked with making a call on 2025. I'm not sure how you do that without understanding the outcome of the election, but they're having a go. The OECD chief economist Alvaro Pereira, as the global economy looks to move beyond peak inflation. That conversation just around the corner. Equity futures on the S&P 500 this morning. Slightly softer, just a little bit negative, no drama. We're down by not even 0.1%. This is Bloomberg.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Adding some weight to the rally in yesterday's session, up by 0.2% on the S&P 500, pulling back just a little bit this morning. We're down by 0.06%. On the Nasdaq 100, down by 0.2. The Russell just about hanging in there. If you switch up the board and get to the bond market, the 2-year versus 10-year, that yield curve gets more and more interesting. The difference between the two, the most positive since June of 2022. We're looking at 22 basis points, Lisa, on the screen right now.
And part of it is because of the precedent that in some ways the Federal Reserve seems to have set, at least as perceived by the market, that a 50 basis point rate cut, the bar for that isn't that high. Austin Goolsbee suddenly representing the mainstream of the Federal Reserve, regardless of some of the others that are coming out and trying to temper the message. But the fact that yesterday, the details of that consumer conference board, just not good, but as justification for another 50 basis point rate cut potentially in November, at least it's seen by the market.
When you read the details of that and then listen to what Governor Mickey Bowman had to say, the hawks and the FOMC sound really offside relative to some of the incoming information. Listen to this quote. I continue to see greater risk to price stability, especially while the labour market continues to be near estimates of full employment. The takes on the labour market just aren't that constructive elsewhere compared to what Governor Bowman's talking about, the Federal Reserve.
To put some details on this, the consumer confidence read from the conference board yesterday, coming out with the differential of those saying that jobs are plentiful and those that are scarce or hard to get, fell to 12.6, which was the lowest reading going back to March of 2021. It is below where we were in the pre-pandemic era after 2017. There is a real question here about how much you are seeing deterioration that isn't being quantified with some of the headline numbers. And Andrew Hollenhorst of Citigroup coming out and saying, this is the reason why we are concerned still about a recession.
Typically not what you see before upturns in the economy. Typically what you see before downturns. People start to get anxious about the jobs market. They pull back on spending. That's what you'd expect. That's what would be, I think, intuitive at this point about what would take place in the next few months.
That said, we've seen head fakes before. The data's been challenged in terms of how accurate it is. Confidence is a fuzzy thing. Ask University of Michigan. There's a question about what exactly is influencing it. Emory did a great job highlighting the political aspect of this. There's a good degree of uncertainty, and the delta between manufacturing, between services, between lower income and higher income. These are the widest gaps we've seen in a very long time. And so it's very hard to get a sense from some of these averages about what exactly is reflecting.
Let's pick out a word you used, confidence. What can China do to restore confidence? Check out the currency. Dollar China, the offshore yuan, breaking 7 for the first time in 16 months following a rate cut overnight. Under surveillance this morning, China cutting its 1-year loan rate by the most in history as the country kicks off a sweeping stimulus program. The PBOC slashing its medium-term interest rate by 30 basis points with further policy moves widely expected.
The key is, what are those policy moves to ignite demand? And we've talked about this extensively. We talked about it yesterday. Essentially, you can lead a horse to water, but can you make it drink? Well, you got to make it thirsty enough. And the way to make it thirsty enough is to actually have confidence in the economy. What you're seeing is, even with borrowing costs that are historically low for China, with yields that have fallen to record lows, you still are not seeing a big uptick in borrowing. This from the China Beige Book. This, to me, is a sentiment shift that we have to still yet to see.
And what you said earlier was exactly right. It's clear that Beijing knows they're not going to be able to hit their GDP target, so they're trying to do everything they can. But is this the bazooka? It's not, unless it's followed up with that fiscal stimulus that's so desperately needed in the real economy. You look at the surveys coming out of China, and Jonathan, you've made this point. Does China need to wait till November 5th to decide how much they need to use that fire hose?
How much ammunition do you need to deploy based on the outcome of the election in November? We spoke to Goldman Sachs yesterday, who said this may have a bigger impact on the equity market than it will on the broader economy. We saw it in the stock market yesterday. All of the China proxies, if they were listed here, in Europe, elsewhere, all rallying big time off the back of these moves.
With the Plunge Protection Patrol, or basically a support to equities, but also, you know, there's got to be a feeling where everyone was wondering, why is this administration of China holding off on stimulus when you've seen growth that is just failing to perform? And the point that China Beige Book was making is maybe this is the first step in their acknowledging the reality, which is a lot weaker than what they've been saying. And if they acknowledge the reality, that alone might give people confidence that maybe they're looking more at the economic side of their mandate, other than sort of a more ideological one. And that might give businesses more confidence.
Certainly gave stock traders a little bit more confidence. I want to get you an update on a big negotiation taking place at the moment. Union negotiators for Boeing workers balking at the plane maker's 30% pay raise proposal, maintaining their demand for a 40% increase. Boeing saying it will offer additional time for the union to schedule a vote among members. Union negotiators saying that they are ready for mediated or direct talks with Boeing.
So they're giving them a lot more time. So potentially you can have this best and final, maybe be some wiggle room around there. What caught my eye this morning was that internal Boeing survey. You know, the FAA has been looking into what's going on there. Many factory workers still felt pressure to prioritize speed over quality months after that midair blowout one of the company's jets. So you see what is going on in the factory floor, and then you potentially try to think about who has the leverage here, because time is of the essence.
Have we even worked out what the problem was initially? And when we have a new CEO, we're still trying to get a sense of exactly how deep these problems go. How big of a piece is this? Some of the complaints that they have coming out of the worker base.
It's a nightmare for incoming leadership. You want to really go out there and lay out your strategy in the next 100 days or something, and you're just sort of patching up leaks here, there, and everywhere, and those leaks are getting bigger.
Can you imagine being in that role?
Oh, brutal.
Coming in, it's like, I'm going to be the white knight, and then you're sort of like, union strike.
At least the bar is low enough, right? And the bar is pretty low for the incoming CEO. Boeing just a touch negative in the pre-market. Let's get to the latest in the Middle East. Israel and Hezbollah intensifying their aerial attacks. Israel intercepting a ballistic missile bound for Tel Aviv in the first instance of a Hezbollah projectile reaching the center of the country. The IDF saying it struck the site where it was launched in Lebanon.
Another red line being evaporated given the fact that the Israeli military is saying it's the first time a projectile fired from Lebanon was able to reach Tel Aviv. The big question now is whether or not we would see a ground invasion. And you have to look at what the defense minister of Israel was doing yesterday, posting pictures of him inspecting Israeli troops, simulating combat in Lebanon. Potentially, this is going to be the next stage of this conflict.
To most uninformed observers, this looks like a war. Are we suggesting that's the only thing separating this from being an all-out war, a ground invasion?
It feels like it is already a war. I think it depends on how people want to actually characterize it with language. They would say potentially this is a conflict. They're worried about a wider war, but this is a warlike conflict, and potentially the next step would be a ground invasion. I think at that point, you cannot have officials backing off of characterizing it as such.
I'm looking forward to speaking with Norman Rule. One of the big distinguishing features to me is, what are the ultimate goals? Is it just simply to push back some of the Hezbollah fighters to bring residents back to the north of Israel? For Hezbollah, is it really to bring some sort of ceasefire with Gaza, or is this something more significant about eradicating threats that they perceive on either side? To me, that is what is going to distinguish a prolonged conflict from something that is short and specific, and that, I think, is what a lot of people are watching.
Norman Rule, about 10 minutes away. Let's turn the page to this story. The OECD releasing its latest economic outlook, expecting global GDP to stabilize with continued disinflation. Central banks still have room to cut rates, but debt sustainability is still a top issue. Joining us now, Alvaro Pereira, chief economist at the OECD. OECD. Alvaro, welcome to the program, sir. I want to begin with the United States and get to some of your forecast on the US for GDP. Growth in the United States projected to slow but be cushioned by monetary policy, with growth projected to be at 2.6% in 24 this year and 1.6% in 25. Two-part question: why the slowdown, one, and two, why do you think we can actually stabilize around 1.5% GDP in America and not go to someplace worse?
Well, good morning. Great to be on the show. Well, first of all, I think it's important to realize that we're talking about a very robust U.S. economy compared to the rest of the world, because we come back to China. China's slowing down quite significantly. We also think that Europe is not doing as well as it could, and other parts of the world are not doing so well. So under the circumstances, knowing that we had a huge pandemic and a big energy crisis, the United States is doing fairly okay. So what explains the slowdown? Well, first of all, there's a statistical carryover issue, which basically the last quarter of 2023 was stronger than we expected. It has a statistical carryover, and so that explains part of the slowdown. And so if you take into account quarter on quarter, we would forecast, 1.9 for the slowdown will be from 1.9 to 1.6. But the second issue, why is this happening? Well, first of all, it has to do with consumption. And so a lot of people had savings during the pandemic, and they are running out. And so this is not so good for consumption. So there's slowdown in consumption. There will be a slowdown in government consumption, which is welcome, because we think that both the deficit and the debt in the United States, we should go back to fiscally prudent policies. So I think it's very important to go there. And obviously, there's also an issue regarding exports and investment. But we think that main reasons why the United States will continue to do well is because it continues to be a very dynamic economy compared to other parts of the world, even though certainly the slowdown is explained by the consumption, both of the government and the individuals.
You make a great case for why we could see something of a slowdown in the U.S., but still why the U.S. is a better growth trajectory than, say, Europe. So then why did you have the Euro region actually increasing to 1.3%? I know it's downgraded from your previous estimate in 2025, but where are the accelerators to get us away from what we're seeing now, especially given some of the trajectory in the industrial base in Germany?
Well, Germany's almost stagnated this year, almost close to zero this year. We see France doing a little bit better, partly because of the Olympics, but partly because of consumption as well, 1.2%. And we have Italy doing so-so, Spain much stronger. Next year, we think that there'll be a higher growth in Europe, and not fantastic, we're talking still 1.3%, but we see higher growth because we think that the recovery that we see in terms of purchasing power will continue. So because wages are recovering, and so this will happen, will have an impact on consumption. But we also think that some investment will take place, partly linked to the resilience fund that were spent by the Europeans on infrastructure projects. So this will help a little bit. So that's what explains a little bit better performance of Europe, but certainly not spectacular growth rates.
All things being equal, where is the growth really going to come from? Where is the growth engine, the new growth engine in Europe at a time where some of the challenges for Germany are structural, especially at a time where Chinese growth has been unreliable?
I think you just mentioned something that is absolutely essential. Part of the problems with Germany right now are cyclical. So it's coming out of the energy crisis, and we know that there's been a downward trajectory for part of their manufacturing, but also services. And also because consumers in Germany have been very prudent, so they've been saving more than other parts of Europe. But there's also structural issues. But you mentioned something that is absolutely true, which is competition with China, and particularly in manufacturing. And there's less demand from China as well for German manufacturing, so that is having an impact. But also there's another issue that I think is important to highlight. We think that Germans should focus on, first of all, improving their infrastructure, especially on digital infrastructure. They are lagging compared to other parts of Europe. But in particular, it's time to go back to reforms in Germany. There's many competition-friendly reforms that are needed. There's too many barriers to services in many parts of the German economy. It's still too difficult, too much red tape around, and we think this is having an impact. In fact, we calculated what's the impact of all this, and you say that for the OECD economies, in order to be with the best practices, economies like Germany could could increase growth by 3% over 10 years if they would do this type of reform. So besides the structural and the issues linked to China and the structure of the economy, we think that it's important also to go back to reforms for Germany.
Well, let's talk about China. The PBOC out with another move today. Do you think any of this is going to help spur the Chinese economy?
Well, we are forecasting 4.9% for this year and 4.5% next year. This was before the stimulus. But I don't think that there'll be a huge change in the forecast right now for two reasons. We know that their exports, Chinese exports, are doing fairly well. In terms of manufacturing in particular, they're doing fairly well. But consumption continues to be a bit subdued in China. So this could help. Some of these measures could help a little bit. But we think really the main ailment of China continues to be high debt, private debt. So remember, private debt is there, about 170% of GDP. It's mostly quasi because it's SOE debt, but it's quite private debt. And on top of this, we know that there is a very large real estate market, much larger than most economies. And so there's some adjustment that will have to continue. And so the question is whether these measures will be able to help demand or not. It's a question mark that we'll see in the next few months. But to be honest with you, if you look at the historical examples of other countries, when you have a big real estate adjustment, very often takes a bit longer than authorities would like.
Alvaro, appreciate the update. As always, says, thanks for joining Bloomberg. Alvaro Pereda there of the OECD on their outlook for 2024 and 2025. In this, just another report suggesting the US is okay, robust, the UK doing all right, Germany the weak spot. Every single report that looks like this, Germany the weak spot.
What I'm really struggling to get a sense of is when will that change? And if that doesn't, then where's the growth engine in Europe? And you can talk about structural or cyclical or whatever you want, but what's on the other side of this and how different does that sort of make the balance of power in the Euro region?
That's the latest from the OECD. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. Warren Buffett's Berkshire Hathaway sold another $863 million of Bank of America stock over the last 3 trading days. That brings Berkshire's stake to 10.5%. The firm needs to disclose trades in Bank of America within days for as long as it owns more than 10%. Bank of America shares fell 1% yesterday and are down 10% since Berkshire began reducing its holding aggressively in July. Meanwhile, Volkswagen and unions are starting negotiations today over wide-ranging cost cuts. Volkswagen plans to potentially close factories in Germany for the first time as sales slow. The move's coming after the carmaker scrapped decades-old job protections earlier this month. The powerful union backing the workers, IG Metall, has pledged to strike if VW sticks to its cutback plans. And the New York Post is reporting Nancy Pelosi's husband sold more than $500,000 worth of Visa stock less than 3 months before the company was sued by the U.S. Justice Department. The DOJ filed federal antitrust charges against Visa yesterday, accusing the company of illegally monopolizing the debit card market. At the time Paul Pelosi sold Visa stock, there was no public indication that an antitrust lawsuit against the company was imminent. That's your Bloomberg Brief. John?
Yahara, thank you. When are we going to do something about all this?
You mean have sort of managed accounts that they can't touch?
Let's just put it this way. I don't know what happened on this specific instance. The appearance of a conflict of interest is a problem. Say it again. The appearance of a conflict of interest is a problem.
If you knew that I had done that, can you imagine? I mean, if you knew that I'd accessed information and sold them, we're not allowed to, and we shouldn't be allowed to have.
How can the standards be higher for journalists than the members of Congress?
We are the standard bearer of.
There is a bill floating in Congress called the Ethics Act. Yes, but over the summer you did see a bunch of senators actually take this up and say we need to push this through. I don't know if it'll ever happen.
Watch this space. Up next on the program, a diplomatic solution remains elusive.
Too many on each side of the Israeli-Lebanon border remain just full-scale war is not in anyone's interest. A diplomatic solution is still possible.
Norman Rule, up next from New York. This is Bloomberg.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Stocks on the S&P 500 pulling back by, let's call it 0.1%. In the bond market, yields on a 10-year higher by 2 basis points, the 10-year 3.75. And the surveillance this morning, a diplomatic solution remains elusive.
We've also been determined to prevent a wider war that engulfs the entire region. Hezbollah, unprovoked, during the October 7th attack, launching rockets into Israel. Almost a year later, too many on each side of the Israeli-Lebanon border remain displaced. Full-scale war is not in anyone's interest. A diplomatic solution is still possible.
So here's the latest. Hezbollah firing a missile at Tel Aviv early this morning, and the latest escalation in the region. The Israeli military saying it intercepted the missile, and this was the first time a projectile fired from Lebanon reached central Israel. Norman Real, a former senior U.S. intelligence official, writing this. Israel will seek to avoid becoming embroiled in a long-term ground war in Lebanon. This could change if Hezbollah successfully uses its largest missiles against Israeli civilian centers. Norm joins us now for more. Norman, welcome back to the program, sir. I keep hearing the same line, that we're on the brink of an all-out war. And I keep sitting here looking at the pictures and the news and ask myself, isn't that already what we have? What is this if it's not a war?
Good morning. Such semantics are of little use if you're catching Hezbollah missiles or Houthi missiles. That's a political comment. That's not something that's a serious statement. This is for all intents and purposes, a war, and it's likely to continue and intensify in coming days.
Norm, will we see a ground operation by the Israelis?
Possibly. The Israeli operations appear to be focusing on intensive airstrikes, perhaps special operations activities, cyber activities, and intelligence-driven strikes. Ground operations risk a costly long-term involvement of Israel and Lebanon. It may follow after a completion of major airstrikes, but I think it's likely, but too early to say.
Norm, you also say the U.S. and its European partners have limited influence over this conflict, and they are going to seek to avoid involvement and are unwilling to employ force to enable diplomacy. What would that force look like to enable that path of diplomacy you're talking about?
Well, for Israel, its goals are to return its population to their homes, and that means cessation of Hezbollah attacks. We have an international peacekeeping force that has been of little use. The Lebanese military is unable to contain Hezbollah. So in theory, if international forces were able to somehow interdict or prevent Hezbollah strikes, that would allow Israel to cease its violence. But this would involve all of these foreign actors in Lebanon, and they're simply unwilling to do this.
Norm, how asymmetric is this conflict? We've heard about the walkie-talkies and the beeper explosions. We've heard about pretty targeted strikes by the U.S. on Hezbollah leaders that have killed a number of senior militants. I'm wondering, from your vantage point, how much does Hezbollah have to return?
Well, Hezbollah has probably lost a generation of its most seasoned leadership. This is irreplaceable experience given their involvement in the Syrian conflict. Hezbollah has lost perhaps a quarter, a half of its missile force, but it has thousands of missiles remaining and missile launchers that remain hidden in civilian areas. But Israel has a strategic advantage. Its intelligence remains, if imperfect, extraordinary. An example being that Hezbollah replaced its missile commander within 1 day of the first commander's death, and Israel was able to kill that replacement within 24 hours, as well as several of his subordinates. Israel was able to destroy the launcher of the missile that was aimed at Tel Aviv within minutes of its firing.
Do we have a sense of exactly what's behind this? And I'm just throwing this out there, but was there a sense that with some of the supply chain disruptions, there were tracking devices that were also kind of implemented throughout? Do we have a sense of kind of how deep this goes?
Yes. Israel has demonstrated for many months a capacity to find, fix, and eliminate Hezbollah's most secretive officials, its most sensitive facilities, and frustrate many of its operations. That implies a pervasive intelligence picture on the country, which must be terrifying to Hezbollah's leadership, but also demonstrates that Israel has done a very effective job of marshaling resources and personnel on a program that likely took years to develop.
Norm, overnight we heard about the Trump camp being briefed from the Office of the Director of National Intelligence regarding real and specific threats from Iran to assassinate him. What is your reaction to this?
This is a very significant threat, but it comes after many months of Iranian threats to former American officials, private citizens who have been warned that they are being targeted by Iran. And we now have the Iranians, in essence, having perceived that no red line had been crossed, moving up to what they think might be the next red line. Here's the threat that we should keep in mind. Iran often employs unprofessional actors, criminals, Hell's Angels personnel to conduct its operations. These personnel don't have great training, and the weapons they tend to gravitate towards are weapons of mass casualty. My worry, and I have no evidence of this, but my worry is that an explosive would be used to kill the former president. Well, the best chance of getting to the former president would be at a campaign event. Therefore, any threat against the president is hypothetically, or in theory rather, a threat against those who attend his rallies. This is a significant development and shows a collapse of deterrence against Iran, at least in this area.
A shocking note to finish on. Norman Rule, thank you for your time, sir. Former U.S. senior intelligence official. A shocking note to finish on.
Absolutely, considering the fact that Norm is talking about how Iran would go about this and what that would mean, not just for the former president, but his supporters.
Up next on the program, Sarah Hunt of Alpine Saxon Woods, Tobin Marcus of Wolf Research, Lisa Coleman of JP Morgan Asset Management, and Danielle Hale of Realtor.com. From New York, the second hour of Bloomberg Surveillance. Up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I think markets globally are really reacting to the Fed pivot.
The relationship between bonds and equities could be kind of undergoing a shift right now.
For equity markets, this is a seasonally weak period.
You're getting rate cuts in a resilient economic environment, which again, historically is good for stocks. I'm optimistic now that we might be near the end of this big rotation.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 just about unchanged after closing yesterday at an all-time high for the 41st time so far this year. On the Nasdaq, we're down 0.1%. On the Russell, we're positive by 0.2%. Bramo, your equity market, coming into Wednesday, very close to a record.
So how much does this actually challenge the idea that so many people have been raising, which is that if you see growth fall or any concerns about growth, you will see that be a negative for equity markets. Yesterday, the boost that we got was from the potential of a 50 basis point rate cut coming in November on the heels of worse than expected consumer confidence data. So try to square that with some of the market narrative.
So I think the bond market woke up to that. Bond market rallied for about 2 minutes. The equity market woke up to that too. NVIDIA changed the story. I wouldn't read into yesterday's gains as this market's seeing bad news is good news anytime soon. I still think bad news is bad news.
It might have to do with where leadership comes from, but this is sort of the key question. How high is the bar at this point for bad news to really have a broader ramification on equity markets that are so skewed to NVIDIA? One thing that I think people are increasingly talking about is how this stock market is not the economy and how concentrated the leadership is in the top 10 names. This idea that you could see positive returns or negative returns that are not correlated to some of the macro signals that we're seeing in the broader economy.
Well, we're certainly seeing the concerns, though, in the survey done yesterday. That metric, share of consumers say jobs were plentiful, declined 7th month in a row. And then those that say jobs were hard to get rose. And that gap is really starting to narrow. It's been on a long streak, the longest since the Great Recession, since the financial crisis. And this is why a lot of economists are concerned. And obviously, this is what the Fed has been potentially leaning into.
These are trends typically associated with economic downturns, not robust, healthy labor markets, but yet you still hear that word, healthy, on repeat. I think I have to respect the difference between what I worry about and what the market seems to be excited about. What I worry about is that this market is basically supported by one data point right now, jobless claims, and that we hope layoffs don't start to climb anytime soon. But if they do, you're going to see a lot of bulls turn into bears pretty quickly. One. Two, what we're excited about seemingly is maybe a re-acceleration in growth, prompted not just by the rate cut last week, but easing out of China. And I think you've seen just a little bit of that in the market, cross-asset, over the last 24 hours.
Especially if this is just the beginning, the opening salvos for something bigger from China. If you end up with a bigger stimulus, could that end up fueling growth in a number of global companies? There's also something that Jill Carey Hall was talking about yesterday, this idea of companies investing in physical infrastructure at an accelerating pace. So there are all of these sort of cyclical trends that are kind of coming in to give some hope. But to your point, how big is the gap between a bullish read on that non-farm payrolls and a bearish read? And that, I think, is going to be really a node of uncertainty and potential volatility at a time where people are clinging to data points that may or may not be the deciding factors.
Payrolls, 2 Fridays away. Your equity market on the S&P 500 just about unchanged. On the morning so far, just a bit of relative outperformance on the small caps on the Russell. In the bond market, yield still climbing, Lisa. The 10-year, 375.83.
Question of how high those yields could go. And we've heard a real delta between people who think of bonds as still the ballast of this market, a sort of offset to risk, and those who say, maybe this is a different time. Dean Kerner earlier this morning talking about, that was fascinating to me. This is becoming increasingly the source of risk. You talked about the fabric of risk and how typically it's been thought of as equities or riskier bonds, but in fact, it is now potentially even in treasuries, which is a reason why he's looking toward gold. Yes, gold. But there is a question here about whether that 60-40 can still operate in that sphere. We talked about that a lot over the past couple of years. An ongoing question.
Gold just off all-time highs. Coming up this hour, Sarah Hunt of Alpine Saxon Woods. Markets running with a, quote, all clear ahead signal. Tobin Marcus of Wolf Research on Trump's promise to take other countries' manufacturing jobs. And Lisa Coleman of JP Morgan Asset Management on the headwinds to top-line revenue growth. We begin the hour with stocks coming off their 41st record high of the year. Sarah Hunt of Alpine Saxon Woods saying equity markets are running with an all clear ahead signal at the moment. If the economic environment remains reasonably good, we expect to see the broader market catch up to include the mid-cap and small-cap stocks. Sarah joins us for more. Sarah, good morning.
Good morning.
Let's pick up on something we talked about just a few minutes ago. Gold's picking up, all-time highs. Base metals did yesterday off the back of these moves from China. We saw it with the miners as well, the likes of Rio. We'll talk to Rio tomorrow morning, by the way. Do you think something's going on here, a pickup in cyclical growth worldwide?
Well, I think that the gold move is separate from the other metals, right? Because gold is also, the central bank has been buying gold. There are the issues about buy gold because it has some stability versus other things. But I think on the other metals, I think that it was a signal from China, because I think that there's been an area where those stocks have not really performed and those metals have not really performed because China was slowing down. So you had this huge run up in copper a few months ago and everybody got all excited because we needed so much copper for AI. But the slowdown in China really took the wind out of the sails of copper prices and also other industrial metals. So I think that part of this is on the back of China's stimulus. So I think that that's sort of where you've got that combination.
Is this a move you chase or fade?
On the metal side, that sort of depends on what happens with the global economy. All of these things are dependent on the global economy, including, what I was writing about mid caps and small caps. You need the economy to do well for that to work. If the economy is going to be okay, then you don't even have to chase the metals. You can see, they will move in, you'll have these little up and down drafts, but then you can say, okay, I feel comfortable investing in that area. If you think the economy is really going to slow and or it's going to actually, be very bad, then I think that it's much harder to look at those things that are economically sensitive.
Is what you're talking about very bad or very good, the difference between 150,000 non-farm payrolls getting created or 100,000 non-farm payrolls?
Well, right now,